going to get paid a lot of money. For public shareholders, they were going to deal with a merger, a combination with another studio that was going to lead to, between the studio and cash infused, lead to pretty substantial dilution. And I think the risk of what the lawsuits would look like, the time to close, the pain from those lawsuits relative to alternatives proved to not add up for Shari Redstone and National Amusements. So
what is going on, guys? I don't know if you can hear me. Let me know if you can hear me. Let me know if you can hear me, guys. It's been a while since I streamed in this setup. Guess who's back again? Can you guys hear me? All right, cool. Let me know if you can hear this clown talking right now.
Fruit off of this tree right now. Like, there's a lot of basic things to do. And then, Joe, you tell me, who's going to be president in 6 months?
Meaning which deals can get done.
Exactly. The regulatory environment in a year.
All right, so you guys hear the clown. You hear me. I'm not the clown. I'm talking about this guy. What is going on? All right, so we have CPI coming out in exactly 13 minutes, guys. Exactly 13 minutes. Welcome to the stream. Glad to be back. It feels like forever since I've been back at the mothership. The mothership being this setup here. Really just basically where I have a monitor. But yeah, feels good to be back. Today is a very special day, not only because it's the first day back, but it's the day that we will talk about GME for a second. But it's the day that we have CPI and FOMC at the same damn time. Same damn place at the same damn time. So that I don't remember the last time that happened. I think the last time we had a back-to-back, meaning one day was CPI, then the following day was FOMC. But CPI and FOMC at the same time, on the same day, I don't remember the last time that happened. So we're going to be streaming all day. We're going to be doing CPI in the morning, which comes out in 12 minutes. Seeing if we can catch a trade off that. Obviously, I don't trade while CPI is going on. I wait for the news to be digested. And then shortly thereafter, we have not shortly. Actually, it's a long time thereafter because at 2 p.m. we have FOMC. So might take a break during lunch. We'll go, collectively go work out, touch grass, eat some lunch, eat some breakfast, whatever, and then come back on the stream. So between 12 p.m. and 1 p.m. Eastern, I'll take a pause and then come back and then trade until FOMC. Here are the forecasts for CPI. Not that it actually freaking matters, because it really doesn't matter. Actually, am I also live on X? I don't know if I'm live on X. I am live on X. Amazing. So it worked. And the other thing that I want to say is this. I'm going to put this here. I'm going to pin it, and then we'll start talking about CPI. But free, private, ICT, and futures trading live stream on June 23rd. First 1,000 people only. All right. So we are doing a private live stream. This is going to be a webinar that I'm doing on June 23rd. Okay. So for those of you that want to learn ICT, for those of you that want to learn futures trading, for those of you that want to learn how to trade prop firms, how to copy accounts, etc., I'm doing that on June 23rd. A lot of you here are already mastermind members. If you are a mastermind member, don't worry about putting your name on this list. Don't take up spots on the list from those people that want to sign up. All right. Don't take up spots on the list. If you're a mastermind member, you're already in. If you're not a mastermind member, and even if you are a monthly member of the Traveling Trader community, you do want to sign up here, right? And also, as a special surprise, we're bringing back the Black Friday sale. This is the sale that we usually do once a year. We're going to be doing this on a half-yearly basis this year, meaning I will give you the same deal that we usually give on Black Friday in June. So you can only get that deal if you're on the list. You can only get to the free private live stream, whether you take advantage of the deal or not, if you're on this list, June 23rd. All right? Pinned in the comments. I watched some of your videos. I'm quite impressed by the confidence in taking trades. Appreciate it. Yeah, I've been doing it for quite a bit. And yeah, I am confident in taking trades. And I appreciate you saying that because, you know, you obviously open yourself up to a lot of vulnerability, right? And holding trades while thousands of people are watching, etc., is not an easy thing. Also, hit that thumbs up. All right, let's get into CPI because it drops in 8 minutes. FOMC is not until 2 p.m. And then I am going to talk about some equities, including GameStop as well. Why is it so yellow in here? Oh, shit. See, this is what happens when you are lacking in training because I've been away for a second. So I have the main lights on here. 1 second. I'm going to turn them off. Wait a minute. All right. Back. Much better. All right. CPI, it doesn't even matter, honestly, what happened. Someone was asking, do you think it's going to come in hot? Look at this, guys. Look at this. Let's count since September 2023. 1, 2, 3, 4, 5, 6, 7, 8, 9 CPIs. Okay. How many came in below expectations? Anybody want to guess? How many came in below expectations? One. One came in below expectations, and that was December. You have 1, 2, 3, 4, 5, 6 out of the last 9 came in hot. 1 came in below, and 2 came in at expectations. So it does not matter. It will only matter, really, if we get a CPI that's above 4 or below 3. So if you get 2-point-something CPI, the market is absolutely going to explode. Not that it hasn't been running pretty nicely. I think, as I've said time and time again in my videos, we will likely hit all-time highs, but it's going to be sort of an inchworm thing where, we hit all-time highs, we consolidate, we hit another slight all-time high, we consolidate. It's going to be one of these things, in my view, until the election. So with that said, I think that if we get, a 2-point-something CPI at 1 point, yeah, I think the market is going to blast off into major new highs. If we get 4-point-something, then I think that will likely give us a correction, right? Not a bear market, but a correction. So in these fringes where CPI is expected to be 3.4 and it comes in at 3.3 or 3.4 and it comes in at 3.5, it doesn't matter, guys. It really doesn't matter, right? What's going to happen on the intraday chart, because we are day traders at the end of the day, what happens on the intraday chart is you will see this during the news. So we don't want to be in that because regardless of whether you are wrong or right, your stops can easily get taken out. There is no point in being in a in a trade during CPI or during FOMC. Actually, there's a funny fucking video. These videos are making the rounds here. Every time there is, anytime there is like a CPI or an NFP or something like that. I don't know if you guys ever seen these videos. Don't be this guy.
फाइनली जैसे हमने एनालिसिस किया था कि वही 530 को EU और USD डाउन आएगा, अभी आप लोग के सामने एनालिसिस और ट्रेड ऑफ हम लेते हैं. हमने डाउन का ट्रेड प्लेस कर लिया.
I think they're trading NFP.
4 3 2 1 boom.
Anyway, don't be in that, okay? Don't be in a trade like that. Aisha loves that video. Yes, I like this video a lot, but there's a ton of these videos, guys. It's not just that one. There's a ton of these videos. All right. So that's CPI. That's the expectation right there, 3.4. I think it could come in line. It could come, I don't know, 1.1 above, 0.1 below. It doesn't fucking matter, guys. It doesn't matter. The last 9 CPIs have been horrible. And since September, this is what the market looks like, right? Since September, here, September, this is what the market looks like. Doesn't matter. Because at the end of the day, there's still too much liquidity in the system. And data is coming in strong. Unemployment data is coming in strong. Inflation data is coming in strong. Now, you can make the argument that this stuff is, calculated conveniently in new ways in order to make them look stronger than they are. That is for certain. That is for certain. All right. With regards to GameStop, and we have CPI in 2 minutes, so I don't want to waste too much time on this. What did I tell you guys with regards to GameStop? Did you watch my last video? I said when GameStop announces that they are done with the offering, that is when we will get a secondary rally in GameStop. And if you don't believe me, go back and watch that video. It's the very last video on my page. You can even look here, GameStop offering. So yesterday it came out that GameStop actually completed the 75 million shares, right? And what's happening now? GameStop is up 24% after that, right? Same thing here. Announced share offering May 17th, announced that they completed it May 24th. That was the start of the rally. Announced the share offering on June 24th. It tanked 50%. Announced yesterday that they completed. We're now up again 23%. And remember, those large call option positions are still open, expiring June 21st, which is the next Friday, which is an OPEX day. So, all right, let's see what is going on, guys. CPI, 1 minute.
Sitting just below 4.4%, 339. The 2-year is sitting at 483. All right, we want to get right over to Rick Santelli. He is going to have those numbers in just about 5 seconds' time. Rick.
Yes, we are awaiting our May read on the Consumer Price Index. And, of course, this is expected to be a big deal for the Fed, which meets today, by the way, and it is hitting the wires. Unchanged on headline month-over-month CPI, unchanged. As was pointed out, we're expecting up 0.1%. Unchanged is the lowest level going all the way back to May of 2020, so we'll call it 4 years when it was minus 1/10. We've had several reads that have been zero. Now, if we look at ex-food and energy month over month, up 0.2, also, as Becky pointed out, 1/10 lighter than expectations, 1/10 lighter than the rear view mirror. up 0.2. Last time we were at 0.2, well, it was October of last year. To find a lower number, up 0.1, you're going to August of 2021. Now the year-over-year numbers. 3.3 on year-over-year headline, 0.1 lighter than both expectations and the rearview mirror. 3.3 is the lightest going back to February when it was 3.2. We started the year at 3.1. And finally, ex-food and energy, or core, year-over-year, expected 3.5. Last look, 3.6, comes in at 3.4. 3.4 is the lightest level going back to, and this is a long way. We're going all the way back basically 3 years to April of 21 when it was 3.0. Even last month's 3.6 comp to April of 2021 because there's a real void there by the way it shot up so aggressively post-COVID. Now, Becky didn't give you expectations for the indices. I consider them maybe the most important. On headline, non-seasonally adjusted, the actual index, it moved up to 314.069, a new all-time high. If we look at the core index, which is seasonally adjusted, that moved to 318.14. Guess what? A new all-time high. Those indices have never been higher, and they underscore the angst that the population has, because no matter how small the month-over changes get, the cumulative effect is substantial, and that's what these indices continue to show us on a month-over-month basis. Yields, as expected, have dropped rather dramatically, and now we're getting right back into where the area of trade was before the non-farm numbers were released last Friday. We're hovering right around 427, 428. That was the low yield before we skyrocketed on the jobs report. The short end of the market dropping as well. We're now at 468, as Becky pointed out. We're at 483-ish before the number. Substantial drops. Pre-opening equities have moved all the way up 260 points in the Dow futures. Becky, back to you.
Rick, I think you summarized it so well. And your point is this basically erases the jobs number that showed maybe something that wasn't going to bring us rate cuts. This erases that number and kind of evens the table again, the playing field?
Yes, I would think that's exactly right.
Wow. Okay, these are some really big moves. Let's get right over to Steve Leisman. He's been digging through these numbers, too, and can join us with more on why we got these numbers. Right? Steve, what was the issue?
Yeah, first, topically, score one for the Doves here. We were trying to, it was kind of like a contest here between the disappointing first quarter and the great progress of last year on bringing down inflation. The question was, did the first quarter augur a beginning of a new higher inflation cycle? April and May together seem to suggest that was not the case. And this debate over whether or not it was renewed inflation or this issue of sort of beginning of the year price increases seems to be, or at least being settled now in terms of continued progress on inflation. Food was 0.1, energy minus 2% with a 3.6% decline in gasoline. New vehicles, a pretty big drop at minus 0.5. Used cars, however, going the other way, up 0.6. That was interesting there. Surge in medical commodities up 1.3. And we did this number, importantly, without a whole lot of help from housing. Owner's equivalent rent still at 0.4, not reflecting any of the change at all that people think is happening, though I will point out Diana Olick, I guess it was yesterday, reporting a renewed increase in rents. But again, that motor vehicle insurance number, remember it surged 1.8%? This was thought to be catch-up from higher auto prices leading to higher insurance prices. Well, that was down 0.1, and airline fares, to renew an old debate between Joe and Andrew, down 3.6%. So there's a lot of, as Rick said, zeros and negatives in here, and you get the impression that what you saw in the beginning of this year, Becky, was beginning of the year one-time adjustments. This is not tremendous progress. It's going to give the Fed confidence to cut, but at least puts us back on the road. And I'll give you right now, I'll look it up, the probabilities now, which I'm guessing are a bit higher. 54 was the number for September, and now it's 69. So you've gone from a coin flip to a little bit more confidence now in a September rate cut, and 82% for November. Let me see what the year-end number did. The January 2025 contract, we've gone from basically thinking of 1.8 cuts to 2.2 cuts, which means we kind of restored the second cut here. Not a dramatic move in Fed fund futures, but again, a little more confidence that the end of the year could bring us rate cuts.
I've been saying this for 24 hours. I flip-flopped just in time, Steve. It was yesterday. Remember?
It was yesterday.
It was yesterday.
Joe, as long as you...
I've been saying this for 24
All right, guys. So you heard it there. The inflation number year over year came in 0.1% less. But what is crazy is the month over month came in at unchanged. So this is the first time since May of 2020. Again, we can argue all we want about, how they're actually calculating the numbers. Guys, there's 1,000 people here and only 94 likes. Come on. It's got to be like at least a 20% ratio. Get it to 200. It only takes a second. That's how other people find this stream. But it's the first time it's been unchanged since May of 2020, right? Which is insane, because that means that from month over month, this is the first time that inflation has not grown. This is the first time that inflation month over month has not grown. And obviously you could see this crazy reaction here by the markets, obviously. Now, it's important to note that what this also means is that the chance of a cut is a lot higher now. So I'm not talking about today. Obviously, that would be so wild, guys. That would be so wild if Jerome Powell comes on stage like that Little Yachty meme. Was it Little Yachty or Uzi Vert? What does that mean where the person comes on stage and is like twirling and everyone's going crazy? Is it Little Yachty? I don't know. I'm too old to even say the word little, to be honest. Lil. Yeah, one of you youngins, tell me if it's Yachty or Uzi Vert. Anyway, it's one Lil Boat. Oh my God. Lil Boat is Little Yachty's nickname. All right. If he comes out like that, if Jerome Powell comes out like that at 2 p.m. and says we're doing a surprise cut, because remember, the Bank of Canada, whatever it's called, the Royal Maple Bank of Canada. What is the Bank of Canada called? Is it just Bank of Canada, or is it like the Royal Maple Bank of Canada? Maybe it's just Bank of Canada. And I'm just saying the word maple. That, and then the European Central Bank, the ECB, they both instituted cuts. Right? Now, that was actually expected, right? That the Bank of Canada and the ECB, that they would institute cuts. But it would be wild if we get a surprise cut today by Jerome. I don't think it will happen, but it would be wild. You're not old. I'm old to listen to Little Yachty. Fuck, bro. Like, I'm sitting here listening to these Drake and Kendrick Lamar diss tracks. I'm like, this is so weak compared to Nas's Ether. Like, Nas's Ether, Jay-Z's Takeover, bro. Compared to these crappy ass diss tracks by Kendrick and Drake, and then you take it all the way back to Biggie, Who Shot Ya, and Tupac, Hit 'Em Up. Hit 'Em Up is the greatest diss track of all time. It's not even close. All right, so what happened here is we are now for the September FOMC meeting. Now the most probable is a rate cut, right? So these things quickly change based on the numbers. The most probable is a rate cut. So there could be a chance we actually get 3 rate cuts, September, November, December. I still think we will get 2 rate cuts unless we continue to get these CPI numbers that come in month over month unchanged, or if the year-over-year number finally dips below 3%, right? Then I think that yeah, if the year-over-year number finally just dips below 3%, or the month over number comes in unchanged once again, I think we will get 3 rate cuts here, right? September, November, December. Now, with that said, in terms of this is why, when I would make videos about the fact that we've never had a soft landing, the fact that you are dealing in dangerous territory if you keep rates higher for longer. And I would always get questions. Well, why do you keep talking about buying stocks if that's the case, right? Why do you keep talking? Because, as I said before, the probably a worse track record than the weather, worse track record than sports, a worse track record than horse racing, right, is trying to call when a recession hits. It is completely arbitrary. Nobody has ever called a recession in terms of the timing of a recession well. And for me, until I get that first rate cut, I think it is a buy territory. Now, for those of you that are in the Discord, you know that we bought. I still, I do strategic buys here and there. I'm not buying stocks like every single day, but Apple was an easy one, right? We bought Apple in March when it hit 165. You can see here, March 5th, right? Next buy in Apple is at 165. Yesterday, Apple hits an all-time high. Finally crossed the 200 mark to 205, right? We're up 23% on these shares. You could see that how strategic I am with my buys, right? I don't buy a ton of things because, I don't think that there is a good buy to be had every single day. Google's another one, right? Google, for me in March, I said this is the level that I'm willing to buy Google. Google was in the low 130s. And then, we reap the rewards of Google also hitting all-time highs. So, yeah, I don't think that there are a ton of things to buy every single day, but I am very strategic with my buys. And I think that you have to continue buying until the market actually, not the market, but really the economy actually gives you a heads up, and that heads up is in the form of a rate cut. I talked about this before, and I'm going to get into trades. I'm just waiting for the market to digest this boner candle here. But, if you look at every single recession, right, when the first time that the Fed cut rates during the bull market before the recession, right, I think it was in September of 2007 was the first rate cut. And then you had, the downturn. And then if you go back to 2000, I believe December of 2000 was the first rate cut. And then you have, a 50% drop, 50, 60% drop. So for me, I don't see the point of stopping myself from making money until I get that signal. Right? I disagree with you. I don't see a recession. Okay. You can disagree, bro. I don't really care. I don't really care. I mean, whether you disagree or not, my point is, you cannot price yourself out of making money. That's my point. So whether you disagree about a recession or not, hopefully you're making strategic buys like I am. You know what I mean? That's the conclusion is the same, is that you continue to buy stocks, buy companies when they're giving you asymmetrical opportunities. Like when Apple hit 165, right? Not only from a technical level was that something that I was interested in, but also Apple's the last mega cap to talk about AI. And I know that they spent the entire last 2 years buying up more than 30 artificial intelligence companies. So it was a matter of time before Apple started touting their AI future. And that came last week, right? You could see when we're in a super bubble, like the AI super bubble, right? You want to hop on the train, especially when there are certain companies that haven't yet jumped on the ship officially or announced that they were jumping on the ship, right? So you had Meta talking about AI, Google talking about AI. Obviously, you had NVIDIA who's leading the AI wave. Apple was the only one that hadn't yet officially disclosed their AI plans for the future, right? And how they're going to make money off that. So being at that technical level, the fact that Apple is obviously going to engage in the AI bubble, right? But hadn't yet announced anything. To me, that is an asymmetrical bet. It was one of the easiest plays that I've ever put out. So anyway, he needs a new pair of goggles. House of the Rising Funk. Sometimes like people try to be funny, but they just weren't born with it. And I feel sorry for them because, they're not funny in real life. And then they try to be funny on chat behind their computer, right? Behind the keyboard. And sometimes people are funny behind the keyboard, but they're not funny in real life because they're awkward. It's a shame when you're not funny in real life and you can't be funny behind the keyboard. It's a shame. All right. See you later for FOMC. Yes, we're going to be doing FOMC at 2 p.m. Eastern. So right now, what's up, Joe? Joe, you've been trading CL? The next one is Tesla on your list. Yeah, I think Tesla. I think Tesla is going to ride the wave into a robo-taxi announcement. I don't know if the robo-taxi announcement is going to be, obviously I'm not an insider, so I don't know how significant it's going to be because Elon is known, unfortunately, for making empty promises and, completely being off on the timeline in which these things will be delivered. But yes, I do think Tesla is their form of AI, right, is full self-driving. Obviously, they have, I don't know, Optimus and all this shit, but no one's really paying attention to that now. People want to know, when the fuck can I hop in my Tesla, right? When can I hop in my Tesla, and when can it take me from point A to point B while I read a newspaper the whole way through and not be worried that it's going to drive me into a wall? That's what people want to know. And that is Tesla's version of AI, right? Full self-driving is a full implementation of artificial intelligence. So do you think that Tesla will be a $500 stock by 2028? What would the market cap of Tesla be at 500? Tesla market cap. So right now, Tesla's market cap is 534 billion, right? So if we do a little bit of calculations here, just to get it exact for you, 500 divided by 170 equals 2.94 times 534 million. So what? That would make Tesla a $1.6 trillion company by 2028. Tough, but sure, why not? I mean, I don't know what that 500 means to you. It seems like an arbitrary number. Anyway, for those of you that just joined, if you're on YouTube, look at the pinned comment. We're doing a free private futures trading and ICT live stream. This is a webinar where I'm going to be teaching it live. You will get sent the link to the private stream. If you are not on the list, you will not get sent that link. So you definitely want to be on that list. It's going to be June 23rd, which is a Sunday. So that Sunday, make sure that you take care of whatever your faith services early so that you can come and watch a stream at 12 p.m. Eastern. If you are already a mastermind student, do not take up a spot, because once the 1,000 spots go, they go, and that's it. Once they're gone, they're gone. That's it. So if you're a mastermind member, you will get sent the link in the Discord. If you are a monthly member, you still want to put your name on this list. Lisa Lynn Dempsey, what is going on, Lisa? Long time. It's been a long time for everyone because I haven't streamed in a month. Did you end up buying Ulta or Shop? I didn't buy Shop yet. I added some Ulta. Yes. Al Moreno's name says it all. Moron for sure. Al Moreno? One of my good friends' last name is Moreno. But he's definitely not an ass like Al. Brother, where do I sign up? Look, if you cannot figure where to sign up, maybe you shouldn't be trading. I literally said it's at the top of the chat, and it's the pinned comment. Do the rest of you see it? Do the rest of you see that pinned comment? It's literally at the top of this chat. All right. Let us see if we can get into some trades here. It would be crazy. We're dealing in uncharted territory, right? Because right now we just made an all-time high. So it would be wild, absolutely wild, if we actually took a dive today, right? Which obviously it's the market. Anything can happen. On good news, we can get the market tanking. On bad news, we can get the market rallying. But I think it would be crazy to try and short this right now. And also we have FOMC at 2 p.m. Eastern. Right now it is almost 9 a.m. Eastern. Market opens in 37 minutes roughly. Do you take any meds to keep you sane from reading these comments? I should, honestly. I mean, I really only have a couple of vices. One, I do like to smoke cigars. And if I didn't care about my health, I would smoke cigars every day. I try to keep it to one a month, right? I really like smoking cigars, but I try to keep it to one a month. But if I didn't care about my health, man, I'd be like Michael Jordan, bro. He smokes, I think, like 15 a day. I really, really enjoy cigars. That is pretty much my only vice, dude. Like, if I'm on vacation, I'll enjoy a glass of wine with the lady, with dinner, whatever. But I really don't drink. And yeah, I unfortunately don't have meds to keep me sane from reading the comments, Bavneet. But I appreciate your concern for Uncle Z's health. I really appreciate it. All right. Let's get into some equities before we get a trade set up. Oh, Tesla up 172. It's going to keep toying with us here. We did sell cash secure puts. Not only are we running the wheel strategy on Tesla by one of our trusted analysts, Kirsten. She's running the wheel strategy on Tesla. But also, I'm also selling cash secure puts on Tesla to generate income right here. You can see my last alert was a couple weeks back, selling the 150 put on Tesla, expiring June 21st for 130. These are up handsomely. So we're not only day trading futures, but yes, we also do option selling. And then, like I said, I'm very strategic with my buys. There is no better time to join, guys, if you want to be part of all this. In my view, it is the best trading group on the planet because we're not only, trading options or trading futures. Everything is backed by analysis. And, we really care about the people that are in the group. So sign up link is in the description below if you guys want to join us and get all my real-time alerts and analysis. But I do think this coil right here, I think Tesla is due for a big move. And what I was saying in the Discord is I'm considering buying a strangle here. Now, a strangle means buying a call and a put not at the same strike, maybe a 25 delta strangle, because if Tesla explodes in either direction, and towards the end of June/July, and I'm going to show you this, towards the end of June/July, right, Tesla starts making a big move. I might even just buy calls as opposed to buying a strangle. But this coiling here, this is going to be over with at some point. And we will get a big move out of here in either direction, right? But you can see if you look at June, if you look at June here going into July, right? Big move out of this coil here. We're talking about almost a 30% move. And that is in 2022. If you look at 2023, this is June going into July. Huge move, right? After coiling here for quite some time. Same thing if you go to 2021. Here's June leading into July, leading into the summer, right? This is when Tesla, when other stocks usually have a lull period, Tesla definitely during the summer likes to see a big move, even during bear markets, which 2022 was, right? Can you trade news on prop firms? On Top Step and Apex, yes. On Top Step and Apex, yes. Option selling and long-term investing is why I'm in the Discord. Los Breezy, what's going on, bro? Bom dia. Los Breezy told me that he learned Portuguese by listening to music. Do you think Tesla will get to 200 by Friday? What the fuck is this, bro? You think this is Vegas? Do you think you're at a sports book? Do you think that you just walked up to a sports book desk and that I'm going to take your bet for you? Do you think Tesla will hit 200 by Friday? Because I really want to buy calls. And if you say yes, then I'm going to do it. I wish I made money on your bet. Like, I wish that I could actually lay you the odds of you thinking Tesla will be 200 by Friday. I really would. I would fill your bet. I would lay you whatever odds you wanted, 10-1. I would lay you 10-1 odds. And I would take your bet if I could. Unfortunately, I can't make money off of these apish desires, right? I can't make money off of it. So I have to be responsible and tell you, don't be adult, okay? Don't be adult. But if I could lay you the odds, maybe I should start a service like this. If people want to bet me that Tesla will be 200 by Friday or whatever, is it going to be 500 by the time Santa delivers my presents on Christmas? Is it going to be 500? I wish I can lay. You know what? I should do this. Is this legal? I don't know. Maybe I'll move to Malta and start a service like this. Because the number of people that ask me about this is astounding. And I wish that I could take these bets from people. It'd probably be even more profitable than trading. Duarte Machado, bom dia. What's going on, bro? I like Celsius here. Yes, it finally stopped being a falling knife. I might sell puts on Celsius. Matter of fact, let's take a look at it. Wow, this is miraculous. I was able to log into Charles Schwab. Is this a miracle or what? This is a miracle, guys. This is a miracle. All right. Will Apple pull back today? Okay. What bet would you like to lay? Oluwasun. Guys, this is not how the stock market works, all right? Like, I know I'm taking a piss, but this is not how the stock market works, bro. Okay? Will Apple pull back today? Will Tesla be 200 by Friday? Will it be 500 by Christmas? Like, this is not how the stock market works. You want to pay attention to levels. You want to pay attention to fundamentals. You want to pay attention to options premiums, right? You're trying to make an informed decision. These 8-ball style predictions, this is why most retail loses money. You want to look at a chart, right? And you want to determine whether you are at a decent enough level to take an asymmetrical bet, okay? Here is an example. If I'm on Tesla, I'm not, trying to guess whether it'll be 200 by Friday, right? I'm looking at this and I'm trying to formulate a play based off what I see. Okay, Tesla's coiling here, right? Tesla's coiling here. That means implied volatility is probably lower than expected. That means if you buy or engage in an options trade that takes advantage of a spike in implied volatility once it breaks out of here, then you will likely have an edge there, right? Now, up to you if you want to determine, hey, Tesla usually goes into the summer bullish, so I'm going to buy calls maybe 2 months out to give myself enough of a cushion. 2 months out, give myself enough of a cushion. What do options premiums look like, right? At what delta do I want to buy? Obviously, I don't want to go super out of the money because Tesla would need to make a humongous move for me to even make money on that. So maybe I look at where Tesla's range is here. Okay, Tesla has been trading between 190 and 170 for the better part of 2 months now. So maybe I would buy calls, maybe out of the money calls to be slightly cheaper, going up to 185 or 190. Not I'm gonna buy the 250 calls expiring on Friday, right? You're just giving your money to the market. You want to create plays that are based on an edge, that are based on data, right? You could go the strangle route if you're not sure which direction Tesla's going to go in. You could buy a 25 delta strangle 2 months out, etc. This is how you want to think about the markets, guys. This is how you want to think about the markets. You don't want to, try to get, will Apple pull back today? Because I want to buy puts. I want to buy, 0 DTE or 2 DTE puts on Apple because I think it's going to pull back today. That's not how the market works, guys. You're just throwing your money unnecessarily. And I say this because I care. I care about imparting good education. Obviously we all made these mistakes early on, but the market is not a casino, right? The market is a place where you can place asymmetrical bets. You can place bets based off of precedence, right? Based off of whether that bet is cheap, undervalued, whether you give yourself enough time to be right, etc. You don't want to engage in these horse betting type tactics on the market. The market can be the biggest casino in the world. Yes, it provides you the opportunity to be as stupid as you want to be. Of course. All right. So with Celsius, if we go out a month, right now it is June 12th. Let's say, well, I'm actually curious to see. Oh, the Delta numbers are all messed up because the market is not open. The market opens in 25 minutes. But nonetheless, I wonder, you can even go to June 21st and collect over $100 per cash secure put on the 62 puts on Celsius. You can go out further than that, and you could sell the 60 puts on Celsius for $240 per contract. Yeah, I think I might sell cash secure puts on Celsius today. I might sell cash secure puts on Celsius today. If you go back to January 2024, you can see the point of control is actually at $80 on Celsius. And there's very little volume here. So I would not mind buying or selling cash secure puts here. Now, another thing you could do is you could buy Celsius shares and then sell calls against your shares. Or you can run the wheel strategy where you sell puts, get a sign, and then sell calls. I might actually do that. For CSPs, you need to own 100 shares. No, you don't need any shares. But if you get assigned, you'll get assigned 100 shares per contract. No, I'm not interested in the VIX right now. Are you going into NVIDIA today? No. We did on Monday's stream in the Discord. I did announce NVIDIA calls, but that was a day trade. That was here. Where was it? Right here. What makes the VIX not interesting to you? What makes the VIX not interesting to me is where we are in the economic news cycle. The fact that CPI came in unchanged month over month for the first time since the pandemic. And the fact that I think Jerome Powell might actually be happy about that, right? And might tout that. I think we might get days of euphoria after that, right? So I don't particularly think buying the VIX here, in my opinion, is something that I even want. Like, you don't have to hedge all the time, right? There are times I'm like, oh, I might want to hedge here. You don't have to hedge all the time. You're better off buying. You're better off trying to find, like I said, asymmetrical bets in the market than you are throwing your money to hedges all the time. Celsius, for me, I will likely send this out in the Discord today, guys. So those of you in the Discord, expect an alert on Celsius. As I said before, TLT to me looks like it is in a very interesting spot, especially with the good data today. Good data today, right? I do think that from here, we can see a rally in bonds, meaning a dropping of bond yields. Let's look at what the 10-year looks like. Yeah, the 10-year already had lost its trend line level. It did so back in early June. We came back up to retest this trend line and are now rejecting off of it. This could be, unless we obviously get a black swan event, which I can't even predict. I think that the 10-year hopefully might have seen the end of its rally. I really actually want the short-term yields to start dropping more precipitously than the long-term yields. And that way we can also get back to fixing the yield curve, which is still inverted, right? Can you sell options in Top Step? No, dude. Top Step is a futures day trading platform. It's not a brokerage. You need a brokerage. You need a, Thinkorswim, Merrill Lynch, Charles Schwab is Thinkorswim now, Robinhood, Webull. You need an actual brokerage. Top Step is not an actual brokerage. Yeah, I want the 2-year to drop. There may be a play on interest rates, actually. Sorry, on futures, on Treasury futures. And the dollar's also tanking here. See, the dollar's an interesting one because it's still in an uptrend. If it fails this, if the dollar fails this daily gap here, right, and moves below it and closes below it, then I think the dollar can be on a downtrend. Like I said, this is the first time since 2020, since May of 2020, that month over month came in unchanged. I'm too poor to sell options. No, you're not, okay? No, you're not. Here's the thing. Everyone starts somewhere, all right? You want to build up your capital. I assume you have a job, unless you're a student. But everyone has a job, right? You can make this your priority, and you can budget around building your capital to get to a point where you can sell options. Now, obviously, selling options on expensive stocks, yes, at a certain stage in your life, you may be priced out from it. But, selling options on something like SOXL, which is, trading in the double digits, don't think of yourself as limited for the rest of your life, right? Like, everyone has budgetary constraints at different moments in time. But if this is a goal of yours, then build your capital to the point where you could do it. I feel like too many times, and I've been a victim of this too when I was younger and, felt a little bit more despair about life. You get stuck in this thinking where, this isn't for me. This is for rich people, right? Sitting in first class, this is not for me. This is for rich people. Selling options, it's not for me. It's for rich people, right? Buying a house, it's not for me. It's for rich people. And I feel like people, have that thought in the back of their mind and limit themselves to the point where they're not taking steps every day to get to a level that, where they can attain these things that they want. So, yes, you may have budgetary constraints currently, but don't put it off as this is not for me. This is for these people, and therefore I'm not ever going to entertain it. Abraham, what's going on, bro? Arturian, what's going on? Thoughts on snow? Thoughts and prayers? Roaring Kitty on X is down? I don't know. Let me see. No. It's up for me. Yeah, it's up for me. Not sure what you mean. What is GME up to? Yeah, I think that GME still has one more crazy wave in it up until next week. Now, I don't know that it gets back up to I don't think that it gets I don't know that it gets back up to, 65. But I do think it has one more wave in it going into OPEX next week. And I do think that those calls might get exercised, to be honest. Thank you for your time and knowledge. Appreciate you, Herbert. I say this stuff because, one, I've been around the markets for a long time. And two, I've been in every position you can think of, man. And I know how negative thinking can completely take your mind over, and which leads to inaction. And inaction has killed more dreams than incompetence ever will. Remember that. Man, the market is just waiting to open here. Citron Research's Andrew left. That guy's a despicable human being, bro. I don't say that about a lot of people, but something about him rubs me the wrong way. Something about him rubs me the wrong way. I wonder what RTY is doing. This might be RTY and YM might be easier to trade here, because when things are at all-time high levels like ES and NQ, it's very hard to find where the liquidity is above. So I might look for, once the market opens, I might look for a trade in RTY and or YM. This right here is definitely the start of a power of three, right? Consolidation. And then this manipulation here, but it's so hard to short the market today. Okay, so on YM, it's very interesting that YM isn't really like going buck wild here. Does Fed rate cut projection open at FOMC meeting? I don't know what that means, but I assume you're asking if it's expected that the Fed cuts rates today, and the answer is no. If they do, I think the S&P 500 is going to 7,000 in one day. I'm just saying. If Roaring Katie exercises his options, yeah, then he'll be buying 12 million shares at $20. And I think that that will create a momentum of volume where other people will buy into it too. But you definitely want to take your money and run. This diamond hand bullshit for 3 years is not going to help you. Your laptop will fly out of the window to the moon? Yes, for sure. This is looking interesting. All right, I'm not going to lie. I really want to short YM here. We did take liquidity above a daily level, which was last Friday. However, we do have a bunch of imbalances up here to mitigate too. Let's see. Guys, there's 430 likes and 1,000 people on the stream. Come on. Y'all can do better than that. What do I have to do? Do I got to do a giveaway? Let's see. What merch do we have right now? What merch do we have right now? I'm so bad at promoting merch. Oh, so we have... Okay. So we have the black hoodies, the I Love Mondays mug, the black hat, and we also have the gray hoodies, which I like too. But for some reason, I really like the black ones. All right. If we get this to 750 likes, I'm going to be giving away an I Love Mondays mug. I love this fucking mug. And yes, I designed this myself. And if we get to 1,000 likes, I'll give away, let's see, what's more expensive? The hoodie. I'll give away a hoodie. Black or gray, your choice. 750 likes, I'll give away this mug to one of you. 1,000 likes, and I'll give away one of these to one of you. All right? And the reason I want likes, not because of ego. I could care less about the like counts. I care more about, you guys getting value that are watching this. But because it helps people find the stream. And why am I concerned with that? Because there's so many clowns online. That's why. There's so many clowns that do not give you value. And I want you to watch this stream and not the clown streams. That is a sick mug. Thank you, Lisa. Did not know you had merch. See, I'm horrible. Zomox. I'm horrible. Make that mug logo into a t-shirt. That's a business idea. Oh, you know what would be sick is having this heart in the form of chart bars. Like on the on the logo breast. I might do that. All right. Anyway, enough about merch. Would you consider live streaming at least once a week? I live stream every single day. What are you talking about? I live stream every single day, guys. Right here. If you want to be part of these shenanigans, sign up below. That's why I said, in my view, it is the greatest value. Because not only do you get fire-ass day trade alerts, I live stream my trades every day. No movement here, huh? I think in 5 minutes we'll get a big move when the market opens. I'm really hoping for, here's what I'm hoping for. I'm really hoping for a counter reaction move. It's very hard to short the market. And until Jerome Powell starts yapping, I'm hoping we get a move here on NQ and ES. They both have the same. Wait, what does it look like on the hour? 30-minute. They both have the same 15-minute gap here. Who are the clowns? Let's expose them right now. I mean, you can expose them if you want, bro. I'm not interested in that. I'm sure, I don't know, throw out some names and we'll see if I agree with you. Tom Lee forecast the S&P will reach 5,500 by the end of June. Yeah, I mean, I think that is a very realistic forecast. Arette Trading, don't know who that is. Patrick Whelan, I haven't watched his streams, but the clips that I've seen on Twitter, he seems like an entertainer, and I don't think that he would shy away from calling himself that either. Stockmo. I don't know if Stockmo even goes live, but I know he dumped his life savings into, I don't know, actually. Did he dump his life savings into Neo? I remember he was talking about Neo for like 3 years. Meet Kevin. I think Meet Kevin is a very seasoned YouTuber and does provide value. I don't know about his stock picks. You guys can tell me, for those of you that know. Plus, he's not a day trader, right? But I don't know about his stock picks. You guys can tell me if you think they're good or not. But I do think he definitely, like, I give credit where credit's due, and I think Meet Kevin is a very seasoned YouTuber. Like, he does YouTube very well. And I'm always impressed that he can just turn on a camera and talk without pauses, right? And, you know, he can read an article and disseminate all of the details of that article in a coherent, 10 or 15 minute video without much pausing, right? I think that does take some skill. And I think he seems to me like one of these news anchors on TV where you could just turn the camera on and they can talk in a very professional manner and make it seem like they know what they're talking about. I think he definitely has that skill. Will Knowledge, I don't know who that is. Iman Trading, don't know who that is. Game of Trades, I think that's an absolute clown channel for sure. Dude just bought a Hummer EV. Saw your Paris video. Didn't know you speak French. Je parle français un peu, mais j'ai oublié beaucoup de la langue parce que je ne l'utilise pas. So my French is probably at a 5th grade level. Buongiorno is not French. Fernando Partida. You're thinking Italian. Z's Algerian? No, I'm not Algerian. I could pass easy, though. Like, if I was in Algeria, you tell me. If I was in Algeria, you wouldn't think it was weird. I could be in Algeria, and people would speak to me in Algerian Arabic, which is very hard to understand. Phoenician? What are you saying? I look like an ancient civilization that doesn't exist anymore? Greetings from Croatia. Bro, I was just in Croatia. Stepan. I was just in Croatia, dude. I went to Zadar. I went to Zagreb. I went to Pula. Man, Croatia is fucking amazing. I loved it. And anybody that wants to go to Croatia. And here's a pro tip. Stay away from Dubrovnik. Unfortunately. Do not go to Dubrovnik. That's where everyone and their moms are going to go. You'll see 10,000 cruise ships docked. It's going to be packed. It's not going to be worth it. There's so many cool places around the archipelago that is not Dubrovnik. All right. I wonder if we can get a long off here. Rovini. I've been there, bro. Germany. I've been to Rovini too. You guys should follow me on Instagram. All the shit's on Instagram. Guys, I missed everything. When is Powell talking? You didn't hear, Tormenta? Powell got kidnapped, dude. He's not talking anymore. Biden and his Secret Service kidnapped Powell. They don't want him to talk. I can't believe you didn't hear this. Look on CNN, dude. It's all over. It's all over the news. They're going to have Janet Yellen speak in his place. Yellen the felon. We need to get to down here. Let me see if there's a trade set up here. This is such a tough spot. It's a tough spot because the stop is going to be so wide. Yeah, this is a 1-to-1 trade here. Thick. This is not enough of a retracement for me. I really want a long here, guys. I really, really, really want a long here. Market just opened, by the way. CNN is the first hit. Thoughts on Powell getting kidnapped by Meet Kevin? What's he gonna do, bro? Lock him up in his neon pink room? I will say Meet Kevin's space, like his studio, it looks like a Twitch Thoughts room. It looks like a I don't know, one of these like Twitch Thought streamers. Ooh, there could be an interesting long here. Will Knowledge isn't bad. I don't know who that is, bro. I'm not going to speak on someone who I don't know. I don't know who Will Knowledge is. Max Zubik says it looks like a gay dungeon. Oh. I might take a crack at ES here. I might take a crack at ES here. Let's see. And hope it doesn't retrace more. Love from Cape Town? Man, I need to make my way to Cape Town. NQ looks good here too. Nike thought? Bro, we don't do thoughts questions here, bro. Ask something more specific. Love from India. Love back, bro. Sundar. Sundar from Chennai. Stop spamming the fucking chat, bro. You son of a... Hello from the Navajo Nation. Man, I really love how worldwide this chat is. We even got people calling in from from a Navajo reservation. Henry, what's going on, bro? I need to make my way to Lagos too. Henry's chatting it up from Nigeria. Prague. I love Prague. Ola Aulola. That doesn't sound like a Czech name, I will say. Ola, are you Nigerian but living in Prague? Yusuf El Basrawi. Hello from Italy. These don't sound like Italian and Czech names. Yusuf El Basrawi. What's going on, bro? Any plans to visit Turkey? I've been there quite a few times. A lot of times. Nur El Ghafi. Hello from Prague. Nur El Ghafi does not sound like a Czech name either. What's going on? I'm just messing with you guys. Obviously, people can live in different places. Ever been to El Salvador? That's on my list, dude. I'm a big fan of Naib, bro. Naib's a good guy. I wish we had leaders like that here in the U.S. Greetings from Chile. I've been to Chile. Big ups to Chile. Man, this is gonna go, isn't it? Fuck bucket. Ay. What the hell? Take my fucking order. All right. Welp. That already played out. Sandy from Kerala. Hello from Kazakhstan. Greetings from Indonesia. What's going on, guys? Hello from Cuba. Brandon, you really in Cuba? My favorite country to visit, Los Breezy. Oh, man. I'm between Italy and France. I don't think there are better places on earth than that, honestly. This is so heartbreaking. I was going to say, if you're from Cuba, you would not have access to the internet. Ola, see, I knew you were Nigerian. You know so many languages. I don't know any of the Nigerian languages. But I know I can guess with a pretty good rate where someone's from by their name. Antalya, Turkey. I love Antalya, man. Antalya is a very underrated place to visit. If you're going to go to Turkey, don't go to Istanbul. I mean, go to Istanbul, but go to Antalya first. Seth, this is lame. Bro, that's what I told your mom when I left her house this morning. I said, this is lame. I'm going to go on a live stream, bro. So ironic. I told your mom the same exact thing. She couldn't believe it. I just walked out the door and I said, Seth's mom, this is fucking lame. I'm going to go live stream. I'd rather live stream instead of hanging out with you. You can tell her now she's watching. Bro, please tell me one of you caught this trade. Oh my fuck bag. Missed this trade by 2 ticks. Oh, please tell me when you caught this trade. Please, please, please. Just make me a little happier and tell me one of you made money off this. Darius took it. Who else took it? Karen Brody took it. Angela and Tony took it. Tor, Debs, Jason D, Abraham. All right. I'm glad some of you took it. This was, oh my God, bro. 2 fucking ticks. We would have been done. It's 6:40 here in LA, 9:40 in New York. You would have been done 10 minutes into the market. MP3 Finance took it. Good job. Stuck on Tesla? Why would you be trading Tesla right now? Stick to the indices. Holy, Apple's at 212, man. I'm so happy we bought that shit at 165. I'm so happy we bought Apple at 165, guys. And you would have too if you had access to this. I'm so happy, man. Gonna sell calls on this soon. Trying to pass top step evaluations? Fuck, you would have fucking passed with that one trade, bro. Oh, this hurts. No love for London? I like London, bro. Just because I said Italy and France are my favorite countries, I love London. It's just Italy and France, like, the cities are in Italy and France are so diverse. Like, the difference between Milan and Rome, the difference from that to, say, Sicily and Sardinia are so different. The cuisine's different. The lifestyle's different. The people are different. The culture's different. It's insane that you can get such different variety within one country. Same thing, like Paris versus Marseille. And then, you know, the cities on the bottom of the Riviera, like Bandol, like Cassis. The difference is, it's night and day between like Paris and Bandol, for instance. Milan is a big shopping mall. It can be, but I don't know where. Milan's a beautiful city, man. Look at this shit. Fuck me, bro. It's the same in Iran. Iran's on my list, dude. Iran is definitely on my list. It never, ever, ever fails that when there's somewhere that has a bad reputation, unfortunately, every time I visited somewhere that has a bad reputation, it has literally been one of my best experiences. So like if you go to Brazil, right? If you go to Rio, they'll tell you, even people from Rio, they'll tell you, don't go to Vidigal, don't go to Rocinha, don't go to these favelas, right? So you get in a fucking taxi and you go and you notice that it is one of the dopest places to hang out. Same thing. When you go to, like, say, Medellin, they'll tell you, don't go to the comunas. You go to the comunas, it is the best time you ever had in your life, bro. And I'm sure Iran is like that. Now, you don't have to agree with governments. I don't agree with any government. Half the time, I don't even agree with my own government. Fuck governments. But I'm talking about the time that you'll have there and the connections that you'll have with the people. It's usually exactly opposite. Like, I'm sure if you go to Syria, you will not find more gracious, more humble, more kind people. They just think you're a local. Yeah, I mean, I do have the privilege of being a chameleon. That's for sure. Like most places I go to, unless I'm in East Asia, I can't pass for that. But most places I go to, I could probably pass for some variant. I can pass a South Asian? No, I can't, bro. That's just wishful thinking. You wish I was your uncle, so you're saying that. I can't pass a South Asian, dude. Do options get time decayed in Dow Jones? It depends. What Dow Jones are you trading? If you're trading DJI options, yeah, every option has time decay. If you're trading YM futures, no. Futures don't have time decay. You can pass as an Iranian who got stuck in South Asia. What is this thing with South Asia? Is it because of my skin tone? Because I'm too tanned for an Iranian? What time does Powell speak? Just Ace. Dude, you didn't know that? I already told you that Powell got kidnapped. 750 likes. I'm going to give away a mug. 1,000 likes. I'm going to give away a hoodie. Do it. Do it. 750 likes. I'm giving away this mug. We're at 600 now. 1,000 likes. I'm going to give away this hoodie. Or the gray one if you want it. Z's from Afghanistan? Come on, I don't look Afghani, bro. This hurts so bad, man. We would have been done for the day, guys. Just know that was the right play. Missed by a couple ticks. Same with Compton? What's the same with Compton? Do you have gray sweatpants in your merch? No. No, you pervert. I don't. What's the same as Compton, bro? Tell me. Compton's right down the street. This hurts so bad, bro. Fuck. His mom would love to see you in gray sweat. So Dow Jones is interesting because as NQ and ES are making all-time highs, Dow Jones is being hamstrung by this liquidity level here, which was the high from last week. Even though we have a 4-hour fair value gap here. So what I'm trying to figure out now on the Dow Jones is this the end of its rally for today? Is it fine hitting these liquidity levels? Or is it going to suck in more liquidity from down here to go back up to that 4-hour gap up there? One of my favorite places to visit is Monterrey. Monterrey in Mexico or Monterrey in California? Like where they have the aquarium and shit. Los Breezy. I lived in Monterrey as a kid. Dude. There are two different Monterreys. There's Monterrey in California, and there's Monterrey in Mexico. Miguel Santillan. You're from Monterrey, Mexico? See, bro, this chat is worldwide, bro. Monterrey in Africa. What does RTY have to do with Apple, Darius? How many DTE are you looking for when you sell spreads? That's an arbitrary question, Evan. That's not a real question. Depends on what you're selling spreads on, why you're doing it, what's the delta, what are your targets, what does the chart look like? There's no singular number. Why don't you report your fake accounts? There's so many of them. I don't know. Why don't you report them? You can report them. He said, why is RTY still struggling? It's up almost 3% today, more than any other index. What you mean? I think there's more longing. This is crazy, but I think RTY depends on what happens to this fair value gap here. If we close below it, there could be a short on RTY till we get to this area. It's so hard to short an index that's up almost 3%, though. Like, you have to take context into effect. I mean, look, this is a very risky play here. Not risky in terms of how much you can lose, but risky in terms of whether it plays out or not. but you could potentially short this just to get to this level here. It's not a great play because this is a plus 3% index, but here's what I think is going to happen on RTY. I think it will come up here. I think RTY will come up to the 2089.5 level, which was last week's high. I think it's going there. But so that's my high time frame bias, but I think that 50% off this wick, which it just hit, if you go to the lower time frames, like the 5-minute, I think there is a shot that this is a scalp. Obviously, you're only dealing in 8 points here, but I think you can potentially get 8 points off of this short. Not an A+ trade, but I do think that once we grab more liquidity on RTY, I think it is going back up. And I think that there might be a broader long to that 20, what level is this? 2104.7. I think there's a broader long after we grab more liquidity here. What's your BE? What do you mean, what's my BE? No idea what you mean. Same thing as YM. I think that YM can target up here, but we did sweep last week's high. And I think in the short term, there could be a move down to this liquidity level here before going back up. Break even? What do you mean, what's my break even? It's not a break even. You have an entry and a stop and a take profit. I mean, I guess you can set it to break even after this initial move down. Yeah, I guess you can set it to break even. But I think there's a chance that it gets to this, at least to this order block here. You trade ICT? Yes, I trade ICT. And for those that want to learn the fastest way, we're doing a free private live stream. Okay, this is not going to be a public live stream. This is a private live stream. You have to register here. The link is the first link in the comment on YouTube, in the chat on YouTube. It's this link. You have to register there. First 1,000 people get in, and then that's it. And you will be sent the free stream link. So you definitely want to if you want to learn ICT, if you want to learn futures trading, if you want to learn how to trade prop firms, etc. You definitely want to join that. But you're not going to get the link unless you're on that list. So make sure you're on that list. What time is it going to be? It's going to be Sunday at 12 p.m. Eastern. And if you're on that link, you will get the recording. Will market going to crash? I don't know. What do you think, guys? Yes. The market is going to crash. Shubham. It's actually going to go to 0. That's my prediction. The market is going to go to 0. And then by the election, I think we'll be in the negatives. I think the market is going to be negative. My S&P target is negative 1,000. Do lifetime members get access, or do we have to register? No, if you're a lifetime member already, do not register. Do not take a spot from somebody that wants a spot, because you will get access to it anyway. If you're a lifetime member, you get access to it anyway. Plus, we're starting Mastermind 7.0 the week after that anyway. So lifetime members will get access to Mastermind 7.0. That is a 4-week, 4 weeks, 8 courses, going over technical analysis, day trading, how to find optimal setups, fair value gaps, order blocks, all that shit. Ten. What is YM doing? Man, it's crazy that in all this bullishness, YM and RTY, like I said, are the short-term short targets. Did I not tell you that? You have a lot of in-depth knowledge. How do I get access to that? It's accumulated over time, man. But if you want access to all of my insights, just join the Discord. I'm on there every single day. Zamox, appreciate your donation to St. Jude. First donation of the day. Appreciate you, man. Hopefully you made money off of NQ and ES and are giving back some of this. It's extremely blurry on mobile. What's blurry on mobile? Is it blurry for you guys? It looks fine to me. Sorry, I might have missed this. Why are you saying the markets are going to 0? If there are any doctors on stream, I don't know what meds would help keep me sane in this environment, okay? Any doctors on stream, please. Med recommendations. We can even do a Zoom call orientation, right? We could do Zoom call. You can diagnose me over the Zoom call, write a prescription, send it to me happily. I'll take it happily. So any doctors on stream, let me know. Milan Patel. Bro, if somebody laid me odds that there would be someone on stream whose fine last name is Patel, and that person would be a doctor, I would take those odds any day of the week. Dr. Patel. As a matter of fact, every person whose last name is Patel, I'm sure their first name is Doctor. Correct me if I'm wrong. I'm just messing with y'all. Tor, appreciate your donation to St. Jude, man. Thank you. $20 Canadian to St. Jude by Tor. Anonymous donated $20. Appreciate you, whoever that was. Thank you. All right, YM really shitting the bed, but I think this might be this order block here. Might be where YM is going to. And I really want to see RTY get there. But RTY is the strongest of all the indices by percentage. Alpha Omega says, that's a lot of bias, even though I'm a Patel and a physician. Y'all are fucking comedians, man. Whole day stream fees. Yes, I'm streaming all day. You guys get access to this madness all day. What? Only 644 likes? 750, and I'm giving something away, guys. Well, YM was the short. Holy fuck. We did get there. We got there. We got to the OB. All right, let's see. Let me see something. Hold on. I might enter a long on YM. I just need confirmation. All right, so YM got to the target. And it might shit the bed here. Let's see. Ideally, YM should reach previous day high. It did, bro. What do you mean? Previous day high is that? Oh, you mean it should drop the previous day high? Not really. I mean, we can mark it out on the chart. Guys, 50, 70, 69 more likes. Actually, let's keep it at 69. That's previous day high right there. Actually, previous day high and 50% of this fair value gap are right around the same point. What is the FOMC data coming out later, and how are you acting on it? We're now fucking fortune tellers? Here's what's going to happen. Jerome Powell's going to skip, but it depends on his commentary. How am I going to act on it? I'm going to wait for Jerome Powell. I'm going to wait for the announcement. Then when Jerome Powell talks, whatever direction the market went in, I'm going to look for a reversal of that. Z suggesting was short ES. Yeah, short ES from 5339. Target is 0. You should make 5,300 points on that. That'll make you richer than Bill Ackman. Minus 1K, Michael. No, that's TP2. That's a second take profit. Is minus 1K. But the first take profit is 0. The second take profit is minus 1,000. Ay, ay, ay. Whoops. All right, I think I'm going to look for a long on YM. I think I'm going to look for a long on YM. Man, I can't believe we missed that long by 2 ticks. I might take a small crack at a long here. Now, the thesis here is that these equal lows here might be the draw. Obviously, we could dig further down. Up 130, 140. Just want to make sure about something. Hold on. We have crude oil inventories in 12 minutes. And then FOMC. We definitely want to watch out for crude oil inventories, but that's in 12 minutes. I want to see if we can target some of this upper liquidity here. Oh, you know what I forgot to do? So if I get stopped out here, then I will look for an entry down in this lower liquidity area. But I took a crack here, a small trade based on the possibility that we took sell side from here. And then we took sell side from here and then created obviously an inverted gap. Inverted gap on its own is not a reason to go long or short, but you need the proper liquidity story. So there's a chance that this was sell side liquidity. Right now, price looks heavy. So obviously will likely get stopped out here. But if this isn't the correct liquidity, then we have this big 5-minute gap down here, where I will then be looking right here at a potential long, right? Okay, so got stopped out of that. So I'll be looking at a potential long once we dig more into this 5-minute gap. Now, what's crazy is that RTY, YM is by far the weakest of all, but RTY has continued its uptrend after not taking much liquidity at all, besides, obviously this 5-minute gap here. But it hasn't dug down into this lower liquidity level. ES hasn't dug down into this lower liquidity level. NQ hasn't dug down into this lower liquidity level. And if you see on NQ here, for instance, it's very similar to YM, where you had this low that was swept, but we did not take this fair value gap down here, and that was enough to take it up. So my trial there on YM was that it's a same exact scenario as NQ, right? You had this low that was swept, and we did not continue down here, right? And on YM, was it YM? Yeah, on YM, we had this low that was swept, and that was not enough liquidity to push it up here. So I think that my thought is that we potentially go down for some more of this here before we potentially rally on YM. Dow Turtle Soup. I'm in at liquidity gap 38981. I'm in at liquidity gap 38981. Yeah. And then, for those of you saying that the play was up, obviously it was up like $130, but that's not what I'm like. Obviously, I'm playing for a broader move, right? Like, I'm not going to take profits just because it's up $130. Is it concerning there's such an increase in energy? No, dude. No. Nothing of the CPI is a concern. Trust me. Man, I can't believe Apple is at 215. How's our Tesla cash secure put today? Oh, hell yeah. Cumulative volume delta says we should go down soon. That's not going to tell you whether you should go down soon. I'm going to set an alert here on YM to see if we get down to this level so that I could take a look at it again. Gold, yes, we can move on to gold. Can you share your email address with me? I have questions. Fuck no. You think I'm just going to give you my email? Just give it out? Do you know how many emails I'll get after the stream? If you want to ask me questions, just join the Discord. I'm on there every single day, bro. Oof, look at that tanking on Dixie right there. Funny enough, GC is not up as much as Dixie tanked. See, gold dug into that last 5-minute fair value gap here. We don't have options in the UK. Yes, you do have options in the UK. Might be good short. You want to short gold on a day that CPI came in unchanged month over month for the first time since May. Discord is confusing. Why are there so many random hashtags? How is Discord confusing? Stock alerts, day trades, option selling, risky trades, the chat, and then our prop firm chat, which people can ask questions about how to copy trades, how to use prop firms, etc. How's that confusing? And I haven't used one hashtag ever on Discord, so I don't know what you mean by hashtags. $23.43. I think there might be a long on gold upcoming here. CL drops heavy. Yeah, because crude oil just came out. Don't be in a trade on CL. Crude oil literally just came out, guys. I think there might be a trade here on gold. Let me check something real quick. Whoops. I'm looking to see what happens here. at this last fair value gap, inverted gap. If it's a PO3 on GC, we should go down even more. Where's the PO3 here? I'm struggling to see the PO3. If you mean this is consolidation? Or what? I'm not sure what part of the PO3 you're talking about. I think this could be. So far, it's respecting this 5-minute order block too. See, we took out this 15-minute fair value gap, right? I think there's a potential long here. Especially if Dixie continues to eat shit. A plus on GC? I wouldn't call it A plus, no. And I don't think there's a trade yet. I think you want to wait here. Ha! YM finally played out. That's so funny. That is so funny. Yeah, I want to read what the crude oil inventories is. London low is right there. So let's wait for that for a second. I can't long YM here again because it did create a 15-minute fair value gap right here. So even though it is bouncing, we could get rejected, take out these equal lows, and then come down for more liquidity. So the dollar was bullish before. Weird market. The dollar. How is that weird? Inflation came in unchanged month over month for the first time since May 2020. So if there's a expectation that interest rates will drop, then the dollar's going to drop along with it. How is that weird? I don't get it. Can we short YM? No, there's no short or long here. You actually believe those numbers? It doesn't fucking matter if I believe the numbers. That's the numbers that are reported. What does me believing or not believing the numbers have to do with the numbers being reported and how I think that's going to affect the market? This is not tinfoil hat hour. No, I don't believe the numbers, but what? So what? Oh, that hurts. 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 Yeah, I want to see how this 15-minute closes. What trend do you think FOMC will trend today? I don't care. And who knows? You wait for the reaction and then you trade the reaction. You don't try to front run the reaction. All right, let's see if GC's setting up for a long here. It needs to close above this. It needs to close above this. for there to be a shot at a long here. Should I buy or sell right now? You talking about crack? Happy Meal? What are you talking about, bro? I think there's a long here setting up, guys. 15-minute looks good. 1 hour looks really good here. The green TT bar covers up the time frame. It's right there, dude. 5, 15. It's right there. Bull flag on the daily chart. Bull flags are meaningless, bro. Bull flags, bear flags are all meaningless. That means nothing. Look, this is a bull flag right here. Wow, somehow we just crashed. Happy? NQ is falling. Hell yeah. Tesla up 3. How much am I up on these cash account puts? What? Jerry West died? Oh, man. Rest in peace. I have a really hard time on not placing trades right after the bell. I get burned, so don't do it again. Rest in peace, Jerry West. All right. What time is it? 10:50. There should be a macro running right now. All right, so CL hit London low. This is a PO3 into London low. I do want to read the crude oil report real quick. 3.73 million barrels versus 886 expected. Which is why it tanked. I want to see if we have levels below here. Yeah, I mean, oil looks extremely bullish, obviously today, with the oversupply in conjunction with where we're at a technical level. We are getting a rejection. No, I'm not comfortable based on a high time frame. I'm not looking for an oil long. I think it could continue down to here, to the 70 mid 76ish level. I'm definitely not looking at an oil long. What does a smaller box on GC represent? What are you talking about? What's the smaller box? I think the market gonna crash for real, for real. Okay. Guys, make sure you short the market because someone thinks it's gonna crash for real, for real. Not just for real. For real, for real. Ay, ay, ay. Yeah, I think GC, there could be a play to at least 2372 within the next day or two. I'm looking to see if we can close above this fair value gap here. If we close above that fair value gap, then I'll likely take a long. I remember you saying you were a buyer when SPY was at 410. Yeah. It was October. You can go back and look at it. Long Apple. Yeah, bro. You're not late on that at all. You're not late on Apple at all, dude. All-time highs, 217. Now long it. Don't long it when it was at 165. Don't long it when it was at 170. Long it now. Thoughts on Tesla? Thoughts and prayers, bro. Thoughts and prayers. FOMC meeting is at 2 p.m. We had CPI this morning. CPI year over year came in 0.1% less than expected. Month over month came in unchanged. All right. Here's where I'm looking at a gold long. 2 minutes until this candle closes. Thoughts on Oracle. Thoughts and prayers. Wow, a lot of thoughts questions today. 10 more likes and I'm giving away a mug. All right, front ran this long on gold a bit. And that's fine. First target would be $23. 50.3. What time is it? 11? And we'll just let this play out. My stop is 2.2 points, which is like $220. Not bad because my take profit is about 700 on here. GME? Yeah, let me take a look at it. What about it? I mean, I told you that once the dilution is done, that is up 22% yesterday, up 5% today. Yeah, I think this continues. And if you look at the volume, oh, we hit 767 likes. Okay, I'm gonna give away a mug. 750 likes. I said I'm giving away a mug. 1,000 likes, I'm giving away a hoodie. We definitely need a lot more volume than this. We need to reach at least the 200 million mark in volume, in my opinion, to keep this going over. For this to keep rallying. So we'll see what the volume looks like after today. Did GME fill the stock offer? Yes. Man, NQ and ES looks still super bullish. All right, YM is almost getting to that level down here, which is yesterday's high, as well as the 50% mark of that fair value gap. And I'll see if we can find longs in that area. Where did CL fall to here? All right, on GC we're up 120 per con. The 1 minute is moving nicely here. It is definitely erratic. So I'm not trusting this move just yet. I do like the entry, but I'm not moving my stop limit here. I'm not trusting this move just yet. I wonder if it's erratic because of Dixie. What's the difference between Forex and futures? I'm sure you can Google this, bro. I'm not going to give you the difference. Forex is foreign exchange, and futures are based on indices and commodities. What long positions are you holding? Besides Apple, I'm holding Apple, Tesla, Apple, Tesla, obviously S&P 500, NASDAQ. Got out of Celsius, about to get back into it. Yeah, and that's really it. All right, here's what you got to do to win the mug. I want you to tell me what is, let's see, what is a good question? All right, I want someone to tell me what is the capital of New York. And the first person to get it right, I'm going to take a screenshot, or not the first person to get it right, but I'm going to take a screenshot. And if one of you get it right, I'm going to pick the middle name of the screenshot at random. Go. 5, 4, 3, 2, 1. All right, I took a screenshot. Let's see, who's the middle name here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 1, 2, 3, 4, 5, 6, 7. 2, 3, 4, 5, 6, 7. So it's between Baron and Aisha. Oh, what's going on, Aisha? It's between Baron and Aisha since there's 14 names here. It's between Baron and Aisha. So one of you pick a number between 1 and 10. And the person that gets closest without going over, I'll give it to. So Baron and Aisha. All right. Aisha says 7. Baron, what's your number? If I don't respond from Baron, it's Aisha's. Baron got 6. The number was 3. So you got closest, Baron. Congrats. Here's what you got to do, bro. Hit me up on Instagram. The link is in the description below. And show me a screenshot of your YouTube profile to make sure that it's you. And I'll send you a mug. All right, we're still up 80 on this. 11, I'm going to wait for 1120 to see if we get a push up. I'm going to wait for 1120 to see if we get a push up. I'm going to, you know what? I hate these equal lows here. He's not going to reduce rates, but that, we'll find out after lunch. So lunch is in 40 minutes. Then I'm going to take a break. I'll keep the stream on, and I'm going to take a break and then come back at 1 and then stream FOMC at 2. By the way, for those of you we need a nice push up. For those of you that haven't gotten to account copying, I have this GC trade copied across 25 accounts. So all you need, honestly, is a small trade. And you can, obviously with leverage, you're making $100 trade is $2,500. Let's go. 130, 160. So if you want to learn how to copy trades, if you want to learn how to trade futures, if you want to learn how I do this technical analysis, how I find my entries, we're up 200 across 25 accounts, guys. 200 across 25 accounts. Let's go. I could take profits here, obviously. I'm not going to. I'm playing for a bigger move. I could move this to break even. I could take profits. It's not in my interest to take profits. I think if we get a push, we can go a lot higher. So 200 is not enough for me. I want at least 700 on this. I have literally paid off my car thanks to Z. Hell yeah, Tor. Appreciate you, man. And guys, if you want to trade live with me every day, join the Discord. That link is in the description. If you want to trade live with me every day, just click the link in the description, put in that coupon code. You don't have to join Lifetime to stream with me every day. You will get access to the mastermind if you join the Lifetime. But if you want to trade live with me every day, click that link in the description. I want to see a nice push here within the next 8 minutes. We can't seem to get above this 5-minute fair value gap here, which sucks, and we need to get above that. I hope I don't get BE'd here. BE meaning break even. It's possible. It is erratic because Dixie is acting erratic, but a free trade is a free trade. Can you check YM? Sure. KP, what's going on, bro? Haven't seen you in a while, dude. Haven't seen you in a while, bro. Guys, I'm new here. Is this channel profitable and informative? No, my goal is to make sure that you lose as much money as possible because it's fun. YM. Yes, it got to this level here, which is 50% mark of the fair value gap. So I'm going to look for a potential long trade here. But it's not setting up nicely yet, so we'll see. May want to tank all the way down. Let's see. CL, I'm not looking for a long on CL. NQ and ES, gonna wait for FOMC and monitor the reaction from there. All right, so I got stopped for break even on GC, which is 100% fine. That was my risk tolerance based on what the price action was doing. If we can get above this 5-minute fair value gap and close, then I'll look for a re-entry. Obviously was up $210 across 25 accounts, but for me, that's not enough. For some people, if it's enough, that's awesome. For me, that's not enough. So we'll look for another trade on that. Market's going back to reality. What does that mean? Raiv, what's going on, bro? Yeah, I think TLT is a buy here. I said this already a few days back when it was below 90. You was up 5K. 20 times 2. 4K. 5 times 2. Yeah, I was up 5,000. I'll be right back, guys. I'm going to get some more coffee. 1 second. Oh, fuck me. All right, we have a breaker and a fair value gap right there. See if I can catch a re-entry. I would have been up. I would have been up a lot more had I kept my my stop limit. I moved it because of the timing and because we weren't closing above this 5-minute gap. So honestly, it was maybe a premature move, but I go off intuition, and a lot of times that saves me, and sometimes it gets me out of a trade. But let's see if we can re-enter here at a more optimal level at this breaker plus fair value gap here. Let's see. Before moving up here. Do you think YM leading the way down? Leading what? Nothing else is down. What do you mean leading? RTY is still up, NQ still up, ES is still up. Yeah. Come on, give me a buy right there. My initial TP was 2350.3. Right here. the middle of this balanced price range. That was an intelligent move. I don't know if it was intelligent. Like I said, I mean, you just go off of intuition, and sometimes it saves you, and sometimes it gets you out of a trade. So, yeah, when we were struggling to get above that 5 minute, and then we ticked down even below that fair value gap, then I was like, okay, I might re-enter this in the PM session after lunch. Took NQ short, nice 2-1. Off of what? You took it short at 34 and it's now at 28. So you made 6 points. I mean, this is not a short. You made 200 on that move? Nice. $800 per con says far from unwound. Hell yeah. Kathy, 900 on that trade. That's awesome. Good job, guys. Jeep says 940. Dennis Scallion says got 700. There you go. First TP hit. 400 on gold. 5,000 per con. I mean 5,000. Hopefully you meant 500. 5K per con? That's impossible. Do you believe the market is due for a correction? No. All right. I want to see if there is a potential at another play. No, I think GC comes up here. Like I think we get rejected a little off here, but then I think it's going even above this eventually. Stayed in, closed $700 per contract. Hell yeah, good job. Good job, guys. Damn, so many of you made money. Hell yeah. What's your opinion on Jasmine? What the fuck is Jasmine? That's my opinion. Jasmine coin? I don't know, dude. Can you look at Corsair? No. I think we're going much higher on gold, guys. I think maybe after FOMC, if Powell says something to tank the dollar more, because remember, here's the thing: when rates go down, the dollar goes down and gold goes up, right? So the first thing that made rates go down was the fact that inflation is down to levels that we haven't seen since 2020. Yes, I know the numbers are rigged, blah, 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 all the QAnon shit, whatever. I'm not here to dispute that. I'm just saying what is reported, okay? So with inflation going down, the dollar, the expectations that rates go down, then the dollar goes down, right? And the second wave of this might be if Jerome Powell starts talking about softening rates because of today's number. So if he talks about softening rates, I think the dollar goes further, and I think gold goes further up. So there may be a second wave opportunity. Even though a lot of you made money, there may be a second wave opportunity for gold. And for those of you that want to learn how we do this, how is it that I even find these setups, how to trade futures, how to copy accounts, how to use prop firms. Wait, oh, yeah. For those of you that want to learn how to do this, make sure that you click that link that's in the chat, the pinned link in the chat, and make sure that you join on June 23rd, the private live stream. You will not be able to join this live stream if you are not on this list. It's not going to be advertised anywhere. I'm not going live publicly. You will only get sent the live stream if you are on that list. And yes, join the Discord, obviously. All right. Let's see if we get a pullback on gold here after hitting that OTE and that BPR. I think we get a small pullback on gold. And then I think there's another long opportunity for after FOMC. Appreciate you, Kathy. And no, that is not corny. I may take another crack at a long here. I think we pull back to at least this level. And I think we get another crack at a long here. great short there. Decent. No drawdown on that NQ short. Dude, what NQ short? All right, like it's in a tiny range here. What are you talking about? Okay, yeah. So you scalped NQ. Awesome. I'm going to take another crack here at a long. This is right before lunch. And there's a tiny fair value gap right there, by the way. The first long I liked a little better than this one. But let's see. There's a tiny, tiny, tiny fair value gap right here. So if I get stopped out, I might take it again from down here, but let's see. NQ is not providing a short. I mean, if you're able to scalp this tight range, that's awesome. All right, up 120. Yo, this is so erratic. We have an IFVG fair value gap here. This is a weaker fair value gap than I like because we did on the third candle push down into that area of fair value. But based on my reading of the higher time frames, I think that at least after FOMC, I think we target higher here. That 2373 area. So let's see. The other indices aren't moving, so this is why we're trying to find trades in GC, YM, etc. We do have these equal highs here from Friday. I don't know how well you could see that. But I'm going to target these, if not now, then at least after lunch, after FOMC. Especially if we expect Powell to be a little more dovish, right? I think that the market can continue even higher. Now, Powell can shit on us and say, fuck you guys. We're going to push harder and keep rates tightened. He can say that, and then, we will get a little bit of a pullback, or he can be nice and be like, hey, the data looks nice today. We're on track, guys. Look out for cuts earlier than expected. So we'll see. Either way, today, I don't think we're cutting rates, but it really depends on what he says. So we're going to be covering that. Currently up 170 per con on this. I'm just going to let this play out. Bouncing off the IFVG, FVG combo here for a chance to break these equal highs up here. So I'm just going to leave this as is, and we'll see what's up. Because if this trade hits 48.5, we're talking about $1,000 per contract up here. So for me, as I said, you guys have seen me be up to 250 today per contract on certain trades, and for me, it's not enough. I think there's a broad here that we can potentially trade to. So let's see if we can continue this buy program going into lunch. And if not, then the next trade I'll take will be after Powell starts talking. And if you guys want to trade with me every single day, make sure you click the link in the description, join the Discord, use that coupon code. We do this every single day. I go live with the crew. So let's see what's what. NQ and ES, there's no trade here, guys. If you want to trade today, stick to up 170 per con. Let's go. Let's push it. Let's get to at least, we're up 200 again per contract. 210. This time I'm not moving my stop to break even. Up 230. $240. What's so amazing about this is that this is copied across 25 accounts, guys. You want to learn how to do this? Make sure you join the Discord and join that private live stream that I'm doing on June 23rd. But I'm going to keep this as is. If you want to take profits, if this is good for you, take profits. For me, I'm going to keep it as is until we get there or I get stopped. But GC's pretty clean today, guys. I'm glad a lot of you made money on the first long. This is the second opportunity along. What prop firm are you using? I have 5 Top Step accounts and 20 Apex accounts. If you want a discount on any of those, that link is also in the description below. You get 90% off Apex accounts and 80% off Top Step accounts. Want to see that nice push up. $230 now, guys. Want to see us take out these highs here eventually. Take profits if it's good for you. I'm curious about that as well. Why copy across multiple accounts when you can buy multiple quantities in one account itself? How the fuck are you going to buy 25 futures contracts in one account? Do you know how much collateral that would require? 25 futures contracts in one account? Plus, you're not using your own money with prop firms. So if you're good enough, you can leverage a prop firm's money. And if you lose the account, you lose, you know, the $20 or so that it costs you. If you're going to use your own capital and you say you do have enough capital for 25 futures contracts, which is like $500,000, and you lose on that trade, you're losing your own capital. So in short, the reason is because of leverage. 270, guys, 280. Let's go. 300 across 25 accounts. I could take profits. Take profits if it's good for you. I'm just going to stay put and let it ride. Do what's good for you, guys. Do what's good for you. You need 160 more to get funded. Yeah, I'm obviously talking about an eval. Yes, okay, $160. Whoop-de-doo. You lose $160 or $500,000. Which would you rather choose? Up 310 across 25 accounts, guys. 320. Let's go. How many of you are in this trade? 330, 340. $370. Let's do it before lunch. All right, 400 per con coming up. I might take this before lunch. Right there at the swing high. I might take profits there at the swing high. Moving my stop to break even here at 400 per contract. 4:30. Ooh, it's getting real choppy here. I mean, real jittery here. Coming into lunch, 4:20. 450. $500. I'm gonna book it. 510, guys. 510 per contract. $510 per contract, guys. Over 25 accounts. And the reason I booked it is because going into lunch is, is prone for low resistance liquidity runs to either side. So we could easily get a liquidity sweep down here during lunch before going back up. Lunch just started, so I didn't want to risk that. If it wasn't lunch, I would hold, because I do think that this right here is my target for today. It's just, it depends on how we get there, right? I don't want to take 500 per contract on 20 accounts, right? Or sorry, 25 accounts, 12,500. So we're up 12,500 on the day, guys. Oh, and by the way, if you guys don't know how to copy trades and how I'm doing it in TradingView, go to my YouTube. Go to my YouTube. And go to, let me find it for you. This video right here, which is how I use a trade copier to trade multiple prop firm. I do a full tutorial showing you how to set this up, whether you're on a Mac or a PC, no matter which prop firms you're using. I use Top Step and Apex in the same copier. If you just wanted to use Top Step, you can. If you just wanted to use Apex, you can. And I show you how to set it up here, right? So, anyway, make sure you refer to that, and then I want to see who took this trade, guys. Who took this trade? Put a W in the chat if you took this trade. I want to see who took this trade. Who took this trade, guys? Shane, Dr. Pisspot, Kathy, Jonathan, wow, Aisha, man, made a lot of money today, and I'm happy about that. W with my mom. You're offering me your mom? No, bro. I got a girl, dude. And she's on stream. What's up, Michelle? The queen is on the stream. The queen is on the stream. Everybody say hi to the queen, even though she doesn't like the limelight, and that's one of the things that I love about her. But we are going to put her on the spot and say what's up to the queen. All right. This is what I'm talking about. This is why I took profits right before we hit that high because lunch is prone to fuckery. Is your girlfriend single? How the fuck can she be single if she's my girlfriend? Dumb shit. All right. So that was it. I'm gonna take a break because it is lunch and my legs are stiff and I need to go stretch. But I will see you guys at 1 p.m. And then Uncle Jerome is gonna. We're gonna get the Fed decision at 2, and then Uncle Jerome at 2:30. So I'm gonna stream all that shit for you. All right. So go touch grass, eat some lunch, eat some breakfast, stretch, work out, get on the treadmill. I'll see you guys. I'm gonna leave the stream on, just because I don't feel like turning it off and resetting it up and whatnot. So I will see you guys at 1 p.m. All right, and a little less than an hour. I'll see you guys there. Glad you guys made money. See you in a bit. Don't leave, or if you leave, come back. All right. All right.
They're talking about VMware and the software play. It was just a short time ago. We were talking about a software slump. We're going to talk more about it after the break. But a really tremendous swing in sentiment. Now, software is the driver. We're just I think it was days ago we were talking about.
No, software is not the catalyst for why you're buying the stock, but you're expecting to finally see the contribution from VMware from the acquisition of years ago. The driver is going to be, what do they do with that AI revenue forecast?
But one other point, I would just say that with regard to all of the chips that go into AI, we have been hearing for the last 6 weeks, as everyone reported, how much money they're all spending on AI-capable chips. And it's not just coming from NVIDIA because they're tapped out. They're producing as much as they can. So Broadcom is going to participate.
Right. We got one more move. Weiss, you made another move. You bought Uber.
Yeah. So we talked about it on the show yesterday at length. And, you know, I was sort of, I believed that we'd see a softening in CPI. I believed it last time was wrong, and I believe we'd see it this time. And so, like NVIDIA, and the addendum I was going to offer on NVIDIA is that if Powell in the FOMC statement is very hawkish, I'm not going to be able to get out of it. So the reason I bought NVIDIA instead of a CAT or something like that is because I don't mind owning it. So the same thing with Uber. So I bought a little Uber yesterday. I bought some more today. I am concerned about the consumer. That's why I sold it. The fact that their cash flow was negative, you know, or there was a line item there in their first quarter didn't really play into it. It's just an observation. Because I think Dara is smart enough now that he knows he's got to come back to doing what he's always done, beat the quarter. So the reason I bought Uber is because it doesn't matter what shape the consumer is in. It matters what the market thinks the shape of the consumer. And if you get a more dovish Fed, which I think could be the case today, as you had mentioned, then you'll get the consumer stocks, which have generally not been good performers, move up. So the bottom line is I had a stock that's been down, well down off its highs. I don't believe it's because of robotaxi, contributing factor, but I believe it's because of the first quarter and because of consumer. So that fear goes away and the stock moves up. I can't tell you I'm going to be there long term, but I do like it. It's a unique asset. I just don't think it's cheap.
All right, Joe, you're also on Uber. Your take?
I think it's great. You know, listen, I agree with Steve. I think it was the loss of profitability that is the reason behind why you saw the very modest correction. In terms of that correction, it was nearly perfect from a technical standpoint. It went exactly to where you would find support. It found the support and is rebounding. Glad to have you on board. I think Uber goes a lot higher from here.
Yeah, I was actually talking to the chief European economist for MasterCard. She was saying after the ECB cuts, she's expecting to see a big uptick in consumer spending. Some of the housing cost pressure is going to decline. I got to remember, Uber is a global business. They have businesses all around the world. We often look at them just at the U.S. and base them on what the U.S. customer is doing.
But very quickly, they're going to return to profitability, and that's the reason to own this stock.
But I disagree with the view on spending, because you've got so many arms that have been out there in terms of mortgages while money was so easy, and now money's been tough. Those are going to be rolling off. So actually, the pressure on the consumer is going to increase as they have to refinance at these higher levels.
It is going the other way in Europe, however.
Yeah, in Europe, it's going the other way.
That's what I was talking about.
I'm talking about the U.S. Where are we sitting,
Well,
Frank?
I said we
sitting in London or in New York?
I'm pretty sure this is the New York Stock Exchange. There's a sign over there.
Thank you very much.
Uber is a global business. Thank you, Anastasia. All right, coming up, we have our chart of the day. Oracle hitting all-time highs. Noted tech investor Brad Gerstner telling us on halftime it's time to go hunting in software. The committee debates the best places to be. That's coming up next. We're back in 2 minutes.
humanly possible.
Halftime, Oracle, it's now trading at record highs as deals with OpenAI and Google. They overshadow a fourth quarter miss on earnings and revenue. The software trade has been pretty tough over the past few weeks, but listen to what Altimeter Capital's Brad Gerstner told us yesterday about the space.
We're probably getting close to the bottom in software. We expect it to inflect higher in terms of growth rates as we get toward the end of this year and into the beginning of next year. Remember, we're trading 20% below the 10-year average multiple for software, if you look as a multiple of either free cash flow or revenue. And so I think this is a good time to go hunting in software.
Time to go hunting from Brad Gerstner. Some broad ownership of software stocks, but Anastasia, I'm going to come to you first. What do you make about his thought that now's the time to go hunting, that software may have hit a bottom, and this is the opportunity?
I couldn't agree more, because first of all, you look at the setup, and both from the sentiment, the positioning, and the valuation, the setup looks great from a contrarian standpoint. You know, it's true on valuations, and especially what happened was everybody crowded into the semiconductor trade, and rightfully so, but they did that at the expense of software. So if you look at hedge fund positioning, for example, in software, it is at the lowest levels that we've seen since 2019, for example. And what does that do to valuations? Well, they're trading at 20-year extremes. So software relative to semis is just extremely cheap. It is also kind of go back to normalized valuations that we saw before COVID. So I like it from that perspective. And then what you have to think about, will those headwinds that software had, will they start to turn into tailwinds or at least abate? And I think so. It had to do with the resetting higher in interest rates, but now that's reflected in valuations. It had to do with the deceleration in growth that Brad has mentioned. I mean, software at one point was growing at 20%. Now it's closer to 10 or 15. And there's not that many companies that meet that rule of 40, which is revenue growth plus operating margin. But I think what you can do is you can find companies that do meet the rule of 40. And by the way, some of the largest ones actually do. So you can have high quality, highly profitable software at a valuation level that is much cheaper today.
All right, let's talk about some possible opportunities to go hunting. Everybody, or you three, I should say, you own Salesforce. Today, Bank of America took it off its U.S. one list. Shares are down more than 9% year to date. Is this, Joe, is this where you would go hunting?
Well, I think the first thing you have to do when you look at these software names is you have to delineate between which one of the software providers are able to see revenue contribution from AI tools in the near term versus others that are building out the product. And in some of the instances of these software companies, like an Adobe, you could call into question that, in fact, spending will go elsewhere because the AI content is going to be better than what they're actually going to be getting from a company like Adobe. So the companies that I look at in which today you could see the revenue being generated would be Palantir, first and foremost, obviously Microsoft, and then Cadence Design Systems, which quite candidly I've talked about frequently on the show, and I wanted to buy this personally. I'll tell you, I missed it. It had its little bit of a correction in April, and then once again in May, ends recovering once again. So those are three names that I would focus on that clearly right now in the moment are seeing the revenue contribution from AI.
I want to go back to my question to you about Salesforce, though. You mentioned you're looking for companies either that are going to benefit or you're looking at if they're just building out the product. Isn't Salesforce a bit of both? I mean, they're still building out the product, and they're getting some revenue coming in. Barclays out with a note just a couple weeks ago saying they'd have even more uptake for their AI tools if they had more product.
It's a 2025 story, though, and that's where the delineation comes into play. Where could I see the AI revenue contribution today? Where is it strongest? Is it strongest in the near term? Or are we building out the tools and services for the future and the revenue contribution begins to take hold? I think in the case of Salesforce, it's a 2025 story.
That's
they're going to be there.
Though.
They're going to be there. They're going to be there, but they're just not there today.
All right. Carrie, I'm going to come over to you. I want to get your take on Salesforce and also Autodesk, broad ownership of Autodesk as well. Some recent, I'm just going to call it like financial kerfuffles with some of their financial reporting. Stocks down big recently. Yeah. First take on Salesforce and then Autodesk. Is that where you would go hunting?
Okay, well, Salesforce, if in fact things start to pick up next year or 25, that's soon enough. I mean, we think that the stock has been hit hard and they have a lot of capability to incorporate AI into all their CRM systems. And everybody needs it, and they've just deferred spending. So we like Salesforce. In terms of, I just want to mention on Adobe, I disagree. I think Adobe will, through Photoshop and all of their other tools, generate a lot of interest and usage.
They will.
And it's coming now. People are already finding them helpful. And it sells for 21.5 times next year's earnings, way down on the multiple. Autodesk, yes, they had a problem and they didn't provide their financials on time, but they came out just last week and said no change to what we had expected. No fines, nothing that was in any way problematic. We think that it's a stock that, again, should start to see a resumption of spending by their clients, and people have been holding that because they've been spending money on AI chips. So that's going to start to come back to them. And we believe, the construction industry is going to start to pick up, particularly if interest rates go down. It's been stalled, and that's good for them.
We got to go, Weiss. I know you own Microsoft. You're looking at software. We got to button up the conversation right here, because right now we got to get to the headlines with Bertha Coombs. Bertha, good afternoon.
Good afternoon, Frank. As President Biden heads to Italy for the G7 summit, the White House announced he will sign a bilateral security agreement with Ukrainian President Volodymyr Zelensky when they meet there, aiming to send a signal to Russia of America's resolve in backing Ukraine. National Security Advisor Jake Sullivan said the agreement won't commit U.S. troops directly to Ukraine's defense, a red line drawn by the president when the war began. The U.S. government has this year issued more than $1 billion in tax credits up front to buyers of new and used electric vehicles. The IRS says a mechanism in the Inflation Reduction Act that kicked in this year allowed dealers to deliver those incentives at point of sale, rather than buyers having to wait until they file their tax returns. And the Acropolis is closed for 5 hours after temperatures in Greece hit 102 degrees Fahrenheit. Schools and essential services such as garbage collection also shut down due to the heat wave. But some relief is on the way. Cooler weather is expected tomorrow. Yikes.
Yeah.
Frank?
Not only is it hot, I believe they call it shoulder season over there in Europe right now. A lot of tourists.
Yeah.
Some tough conditions. Bertha Coombs, thank you very much. All right, coming up in today's ETF Edge, we're going beyond big tech. We're going to look at where you can find opportunity outside of the Magnificent Seven. Our Bob Pisani is standing by with much more. Halftime Report back right after this.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
We are back on halftime. Now we're to Bob Pisani with today's ETF Edge. Bob.
Hello, Frank. Good to see you. It's been another year where growth stocks, particularly tech, outperforming value stocks. Large caps have outperformed small caps. But diversifying beyond tech stocks is important for the stability of any portfolio. That's what our guest says. Phil McInnes is the chief investment strategist at Avantis Investors. He's got over $40 billion in assets under management in the ETF space. Phil, you heard what I said. Investors seem to only want large cap growth stocks this year. They've been outperforming for a long, long time. You have a large suite of ETFs in value, in small cap, international. Given tech's outperform for most of the last decade, what is the argument for diversification?
Yeah, absolutely. And Bob, it's great to be here. Thanks for having me. We're always believers in this idea of, look, there's opportunities outside of the largest stocks, outside of the highest quality companies. We want to be, as we're sifting through companies, looking at opportunities. We clearly want to be looking at both sides of the equation. We want to be looking at the profitability of these companies, what they're able to generate. But just as well, we think valuations really matter. The longest data sets we have going back in time, if you kind of look from large caps down into small caps in the U.S., going back all the way to 1973, if we're careful about how we think about valuations across those companies, we see some really attractive opportunities within the small cap value space, the mid cap value space, and even our large cap value strategy. And what you said before around kind of value versus growth, I'm a big believer that a lot of what we see in the marketplace as far as some of those labels, it's actually not telling you enough about the attractiveness of that company. If you look at a lot of the index-based ETFs that are out there in the marketplace, there's massive differences in the definitions of what these value stocks are, what these growth stocks are. The value indexes that you tend to see, they're really overly reliant on some single measure of value, something like just price to book. And we're proponents of, look, you got to look at both sides of the equation if we're going to buy a company here. Right. And so if you look at value through this more complete lens, you can uncover some very attractive opportunities.
So value and small cap have underperformed for over a decade, but I know you've come up with ways to address that. So you're combining value, I see, and small cap metrics with profitability metrics. This is sort of three different, sets here to have a new form of active management. I know you had some success. Is that the idea now? If value doesn't work, value and profitability might work better.
Yeah, I think it is. It's going back to that idea of what value really is, right? And for us, we think about, we're looking at companies that have attractive discount rates, because that discount rate's a pretty good proxy for our expected return. And if you're thinking about doing that at an individual company level, you're absolutely going to consider both sides of the financial equation, right? You're going to consider the cash flows alongside the equity position in the company. That's one of the big differences that we bring to the table if you think about this kind of active component versus a lot of those index-based. But the other thing that's really important is we're doing this on a daily basis, right? We're looking at up-to-date information as we make decisions. We're coming into the end of June. The Russell Index rebalance, something that is always top of mind there. You can't rebalance a portfolio once a year and expect to have the best portfolio all the way through the year.
So I got to get a quick answer here. Is there a reason that value and small caps keep lagging? We hear they outperform over long periods of time. I know some people want to blame passive ETF buyers who keep putting all their money into large cap funds. Can you give me a quick answer? We've been waiting for 15 years for value and small cap to make a comeback, and it really hasn't happened.
So at Avantis, we haven't been around 15 years. Our small value strategy has been around about 5.5. 4.5. We're coming up on 5 years. It has kept up with the S&P 500. So it performs quite differently than the rest of small cap and value. I think that emphasis on quality is super important.
Yeah. All right. We're going to have a lot more coming up on portfolio diversification, on big cap versus small cap, on value versus growth. That's coming up on ETF Edge. That's 1:10 p.m. Eastern Time. Phil will be joined by financial futurist Dave Naudig. That's etfedge.cnbc.com. Frank, back to you.
Another great conversation, Bob. Thank you very much. All right, coming up next, our calls of the day, including a bullish bet on housing, the home construction ETF. It's on track for its best day of the year. The desk debates that trade coming up.
today.
And we are back here on halftime. Let's get to our calls of the day. UBS saying Lennar and KB Home are buys heading into earnings next week. Joe, you own Lennar in the Joe T.
Yes, we have exposure to home builders through Lennar, DHI, and NVR. We've had exposure to the home builders now for the better part of nearly 2 years, and it's been a strong performer, certainly in 2023. The gains have moderated somewhat here in 2024. Really where we are right now, you have to accept interest rate volatility if you're going to be allocating to the home builder space right now. You have to understand that the balance sheets of these companies are in a much stronger position. You can define these companies as quality if you want to. From the perspective of where they sit in terms of price, I could see the reasoning behind the call. I could see further appreciation again, but let's be clear. Let's set the expectation. You need the cooperation of the interest rate environment. You can't have a backup in yields. You need the environment to be similar to what we've had since May 29th, when you've had nearly 30 basis point decline for the 2-year and the 10-year.
All right, we have a bunch of calls on NextEra Energy, Goldman, Wells, and UBS. They're all laying out the bull case, but we have Mizuho downgrading the stock today. Kara, you on this one?
Yeah, so we like it. Now, NextEra is a name that had a 30% rally in a month for a utility, which is very strange. That's on the back of this AI push for utilities to go for data center building. And what we would say is maybe the stock got a little ahead of itself, but now that it's come down, we think it's very attractive. This is a company that has two sides of it. One of the best utilities in the world, Florida Power and Light, continues to grow. Data centers is a big part of their business, but also they're in the sustainability business, and they're the biggest in the field.
Anastasia, I want to come over to you. Utilities, do you see more upside? I mean, they've had a big run up, double digits year to date on the idea it's an AI play.
Yeah, I think selectively, yes. And you have to pick the company probably like NextEra that gives you this combination of the right time in the cycle, the right amount of exposure to AI, and also the right amount of exposure to renewables. One of the reasons why I think analysts do like NextEra is because it is one of the leading companies when it comes to renewable transition, wind, solar, battery storage, and there aren't a lot of others that can participate in that like that. The other thing I would say, if you look at the renewable energy transition, the residential side of it has fallen behind because it does cost you a lot of money to put that rooftop solar on your house, and at high interest rates, that's really prohibitive. So I think utility scale, solar and wind is the way to go now.
Yeah, utilities up 10% year to date, trading slightly lower right now, but again, up 10% year to date. All right, still ahead. We're counting down to the Fed decision just over an hour away. Mike Santoli, he's standing by with his midday word. Halftime, we'll be back right after this. And we are back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. Mike, over to you.
Yeah, Frank, I mean, I see today's action as sort of a rational tension release trade. We obviously got the little bit of a green light from CPI to stop worrying so much about deviating far from the soft landing path. So the market has been best this year and has been broadest this year when the soft landing scenario was most plausible. So we're rebuilding some of that. I do think everything about the Fed's framework and what they've said to date and how they've been treating data dependence suggests that Powell should be relatively benign and dovish today. I think the question is, where are market expectations now that we have this good number behind us leading into that press conference? You know, he's going to be pinned down probably as to whether September is on the table for a Fed rate cut or how many more good inflation prints we need to clear the way for a rate cut. Maybe the market kind of whips around on that basis, but I think it's more important that they have the freedom at this point, or at least they're seen as having the freedom to move without too much of a high threshold here for inflation proving itself to be back on track.
All right, so it's clear the Fed has a big influence on the markets, Mike. But do we need to see a rate cut this year to keep this rally going? I've seen a lot of notes out there on the street that we just need to get an indication that they're coming. We don't need to necessarily know when they're coming or even have them come this year.
Yeah, you need the potential for them to move at minimum. I do think the longer we go, if we do persist throughout the year, especially if there's a sense out there that the Fed is going to have any reluctance to act around the election, I don't think that makes sense to have that skepticism, but it's going to be there. You'll see the market not be able to tolerate anything that looks like a growth slowdown. So I think that's the question. Does the market's patience run out before the Fed does if economic indicators keep softening up, if unemployment ticks higher? We don't know if that's going to be the scenario, but I think that raises the prospect the longer we go of the market sort of losing its patience.
All right, just over an hour from the Fed decision. Important to note, the Dow well off of its highs of earlier, pretty close to flat right now, but the S&P and the Nasdaq both holding on to their gains. All right, coming up, the state of banks. The group ticking higher today, but down 5% from recent highs. The committee debates their top picks. That's coming up next, right here on Halftime. Stay with us.
Navaj.com.
And we're back on the halftime report. The banks bouncing back today as we gear up for the Fed decision. Anastasia, coming over to you. You see some opportunities, but specifically in the big banks.
In the big banks, when you ask people what they're bearish about when it comes to the economy or the banks, they'll tell you it's the potential for mark-to-market losses because of higher interest rates. But what's happening today is the exact opposite of that. You have the 2-year down, the 10-year Treasury yield down 15 basis points, and as a result, the regional banks actually rallying very strongly. So if we can have a continuation of that move and rates continue to move lower, that we can put that risk aside for banks. And at the same time, strong economic activity should mean lower defaults, lower losses, and also better lending and better capital market activity.
All right, Judd, you have a lot of financial exposures, including some of those regional banks. They've got some warnings about Huntington. Also, I'm seeing a couple other names in here. What's your take on
Regions,
specifically
M&T Bank? We added those at the end of April. So we own 3 regional banks now. We weren't in the regional banks for the better part of the last 15 months, made a small return to it. They really haven't worked very well. Yesterday, they're recovering. Anything related to interest rate sensitivity is recovering today. The real estate REIT is rallying as well. I think when you look at the banks right now, you want to focus on where the strength has been. That's been in insurance. That's been in private equity. That takes you to KKR and Apollo.
Got to run KRE up just about 3.5%. Final trades are up next on halftime. Stay with us. All right, welcome back to Halftime. We have a big interview coming your way post-Fed. Scott Wapner will be live from Double Lines HQ. He is sitting down exclusively with Jeffrey Gundlach for his first reaction to the Fed and the Jay Powell news conference. That's coming up today on Closing Bell. All right, now time for final trades. Anastasia, you're up first.
I like Europe. Growth is rebounding nicely there. Earnings recovery is underway and feels like everyone's going to Europe this summer.
Steve Weiss.
Uber. I'm going to double down on that in this show. I still think it could recover, and it's a safe stock in a volatile market, given the correction.
Carrie.
S&P Global, it's been in a holding pattern for 4 months with lower weights possibly. Companies will issue more debt.
Joe?
Datadog, we own it in the Joe T ETF. You're thinking about AI, cloud, and security.
All right, that is it for halftime. The exchange starts right now.
Thank you very much, Frank, and welcome to The Exchange. I'm Kelly Evans, and we're in the final countdown to the Fed's decision on rates at 2 p.m. Eastern and to Jay Powell's press conference at 2:30. Now, it all comes after we got that cooler-than-expected CPI report this morning, giving stocks an initial boost, as you can see here, with the S&P and the NASDAQ hitting records. I was going to give that a big start. You get the feeling. Stocks are pairing some of those earlier gains now. Dow's up 44. S&P still up 1%. NASDAQ nearly 2%. And the small caps are flying with a 2.6% gain. The flip side of that is that yields are moving sharply lower with the 10-year back below 430. Look at this now. We're at 425. The 2-year plunging as well. The 30-year showing some moderation. The 2-year is at its lowest level since the beginning of April. Gold, meanwhile, is moving higher. It's at its highest level since about June 7th, while the dollar is going in the opposite direction, showing some softening here. 104. WTI crude, for its part, largely flat.
What is going on, guys? You guys like this little message here? Del Boy Dad says thoughts. Wow, couldn't start the stream again with a worse message than thoughts. Damn, you still on live? I took an hour break, but yeah. Wow, look at that. Gold gonna inch towards those equal highs at level 2357.8. We are buying Tesla and Riot. Are we buying Nvidia? Wow, bro. Really, really early. You're really early to the party. You want to buy Nvidia at all-time highs. That's amazing. What did you have for lunch? It's still 10 o'clock here. I'm on the West Coast, so I don't typically have breakfast. Let's check on YM, guys. Let's check on YM. All right. So for those of you that missed it, we had two winning trades on GC. For me, the first trade hit break even. I set my stop at break even too prematurely, but a lot of people on stream made money. Second stream made $12K on gold. $12K on gold. $500 per contract times 25 accounts. Thoughts on silver? Thoughts and prayers? I don't know. What are your thoughts on donuts? What are your thoughts on flying Boeing airplanes? What are your thoughts on these sunglasses? I don't know. What are your thoughts? What are your thoughts on life? Ask me a more specific question, dude. Please, no thoughts questions. You talking about silver as an investment, as a hedge, as a color? You talking about silver as a day trade, as a swing trade? What the hell are you talking about? Thoughts on 800 likes? I could tell you what are your thoughts on 1,000 likes. We already gave away one mug at 750. We're going to give away a hoodie at 1,000 likes. So get the damn stream to 1,000 likes. Je pense donc je suis. Nice. Nice. Very philosophical. Buy or sell in gold at news on FOMC. How about you buy a plane ticket to Vegas and go gamble there? That's not how you trade, bro. That's not how trading works. All right, so FOMC coming up at 2. Here's what I'm expecting, all right? 2 o'clock, you get an initial move. Once Powell starts talking at 2:30, around 2:50-ish, you usually get a counter move. Do you have a code for Top Step? Yeah, look at it in the description. In the description below, you will get a discount code off of Top Step. Let's run those 2:30 calls. What do you mean, let's run those 2:30 p.m. calls? When is the speech? What part of 2:30 is confusing, Sean Murphy? Where to watch the Powell speech? Gee, I wonder. You guys are coming up with some fire-ass questions here. I wonder where you're going to watch the Powell speech. I wonder. I really wonder. You keep watching it here, bro. Where do you think you're watching it? Usually FOMC trends in one direction. No, that's not true. Who is Powell? Powell's Bookstore. Need some coffee. I have some. All right. If your question is formatted like a PSD, like a what? PhD thesis, don't ask me. No, I'm just saying. All right. If you're going to ask me thoughts on silver, honestly, like day trade, swing trade, investment, the actual metal, etc., like, yeah. I come for the trade, stay for the fire questions. All right, so on gold, I think where we're gonna go is, is that when you would enter a trade? Shannon, I don't know. Let the actual speech start, and let's see. You're too many people try to front run these things. Like, why do you have to enter a trade now or know what trade you're going to enter now? Just wait. Just wait. I think we are going for this. You have a bearish breaker here on the 4-hour on gold, and you have this 4-hour fair value gap. I think we're going up there. Your thoughts on the Apple move? All right, here are my thoughts on the Apple move. Wow, that shit's crazy. There's my thoughts. Also, wow, we knew this would happen. That's my second thought. How did I know this would happen? Because I told it to you back on March 5th. On March 5th, I said Apple at 165. And now Apple is at 216 because of AI. See, the reason is because, bro, right now, buy, you said? Shannon says, I asked because you never finish your thought. Fair. I did not finish that thought. Also, like I said, I mean, like how would it benefit you to enter a trade now or to wait for 2:50 p.m. and then enter a trade without analyzing what actually happened leading up to it? I'm just saying that wait for the rate cut decision, or the rate decision to come in, which will be obviously not a cut. They're going to keep them the same. And then wait for the Fed to actually start talking and see if Powell is going to give any more indications of a cut or not. Wait for that initial reaction. And then after Powell starts talking, there's usually a counter reaction. That's all I'm saying. Do not short or long right now. I'm just saying wait for him to start talking. You want to be in early, don't sleep. Okay, enter it. Digital. Enter a trade right now. Will you trade FOMC? No, I'm just here to make you laugh. How much time remaining for Powell to be live? Okay. Assuming they didn't teach you how to read a clock when you were in grade school, right now it is 1:11. The rate cut decision or the rate decision comes out at 2. That means you have 49 minutes. Powell starts talking at 2:30. That means that you have an hour. You have an hour and 19 minutes until Powell starts talking. Bro is so grumpy but funny. Honestly, I'm not grumpy. It's just hilarious to me. Like I'll say Powell starts talking at 2:30 and then someone says, how long is that? How far is that from here? It's funny. What can I tell you? What time is he talking? All right, I'm done. Did you have a chance to read my comment? No. Hawkish or dovish? Who cares? How would I know? Let him start talking. All right, let's see if we can find another trade. I think gold is coming up here. You could have held it through lunch if you wanted to. I didn't. We took 500 and change per contract, which is awesome. The next thing I'm going to look for is a potential trade on YM. Now, why is YM falling? Remind me of the companies that are in the Dow Jones. Here are the companies that are in the Dow Jones. Apple's in the Dow Jones, and Apple's up 4%. So is Microsoft. Everything else is down, meaning healthcare is down, consumer discretionary is down, energy's down, and the banks are down. So that is why the Dow Jones, it's not down, but it's the weakest of all. I would like to see a bounce here. I might trade. I might take a trade back up. Let's see. Hold on. Tuesday. For those of you just joining, welcome. We went live way early for CPI. Caught 2 trades on gold. The second trade, I caught a 12K trade on gold. Looking to see if we can catch another trade here. Do you have thoughts on doing a straddle on very volatile stocks like software companies. One, you didn't say whether you're buying or selling a straddle. Two, that's a too general of a question. What company and why and what level? I think there's another long on gold here, guys. I think there's another long on gold here. I'm going to enter another long on gold here. I made 500 per con last time. This is risking 180 of that to make an additional 620 across 25 accounts. So let's see if I can get an entry here. You're in short? Short on what? Gold? Let's see who will win. Can I send you my case study? How I helped Tradeovate get acquired from Ninja and scaled Ninja Trader from 12 million to 20 million in ad spend? You sent me this message already on social media, and I have no idea what that means. And I would suggest you get a copywriter to write your pitches for you, because I don't know what that means. So I don't even know what you're trying to sell me. Do you have a securities license? Not one that is current. Why? Oh, so that was you in the DMs? You DM me, bro. What do you mean that was me in the DMs? So are you seriously going to wait until this hits? I'm up 12K, Emma. Yes, I'm going to wait. If it doesn't hit, oh well. Where do you live? You look tanned. Could it be God-given genetics? What ethnicity are you? Are you Indian? Yeah, bro. I'm Indian. I'm as Indian as a tandoori oven, bro. Okay, so you made $20 million and you're trying to pitch me on something? Enjoy your 20 million, bro. As an Indian, we claim Z is not an Indian. Ooh. I could say something, but I'm sure that I would get canceled. So I won't. Tom Nash says, "Hey, brother, long time. We may not agree about politics, but I respect your work. Great to see you're killing it." Thank you for the comment, man. And yes, we definitely don't agree about politics from some of the things I've seen you tweet. They only mad because he's the only profitable Indian? What? You guys are wild, man. You guys are wild. What does Kenan say? Kenan, bro. I agree with that, man. I agree with that, Tom. For sure. And like I told you on Twitter, bro, if you ever want to have a serious conversation, and not, resort to short Twitter responses back and forth, I'm down for that, bro. I'm down for that too. We can have a serious conversation. You definitely seem to know a bit more about geopolitics than the average person that, talks about these things. And I can assure you I'm in that same ilk. So if you ever want to have a serious conversation, off stream, on stream, we can do that too, bro. Ryan, here's what I think is going to happen for FOMC, okay? I don't think we're going to see rate cuts. And yes, I'm entertaining these questions as I'm looking for trades, okay? It's not like I'm entertaining these questions and not looking for trades. We already had a 12K trade earlier in the day. Oh, schmeck. Nobody told me CL went back above London. Oh, it happened during lunch. There might be a CL long here, guys. There might be a CL long here, guys. Oh, I might take a crack at a CL long here. But I think Jerome Powell, obviously, they're not going to cut. It really depends on whether he comments on today's good inflation numbers, right, and says that they see a path to cut sooner than expected. Oh, wait, what the fuck did I just do? I don't know what I did. Sooner than expected, then I think the market will keep on ripping. If Jerome Powell says, yes, today's numbers were good, but we don't care, we're going to maintain a pretty harsh stance on rates and on the balance sheet reduction, then I think that could put a small hamper on today's price action. So it really depends on what Jerome Powell is going to say. I don't know how many times I could say this, but that is where I'm at right now with FOMC. Right? Does Jerome Powell say, I want to get in on this? This is a bit risky because we do have a 15-minute gap here, which we can go down to. But I think there's a potential long on CL here. That long on GC would have worked. I think there's a potential long on CL here, guys. Oh, actually, no, I don't like this. I don't like this. Here's why. We have a bearish breaker here. This right here is a bearish breaker inside a 1 hour fair value gap. So while this long could work as a scalp to here, which it probably will work as a scalp to here on the higher time frame, you generally want to go with the higher time frame. And right here we have, you see this? We have a bearish fair value gap and a bearish breaker. This is a bearish unicorn. So I don't want to be caught in a long here. So I'm all right not taking this trade on CL. So I canceled it. Got to be quick on your feet. Would have been awesome if we caught some of this long here, but this happened during lunch. So, and I generally don't trade lunch. If only the audience knew how much money we get on the daily in the Discord. I know, Lewis. I know. Don't you think you're at a high supply zone? That doesn't mean anything to me. What is a high supply zone? Talk to me in terms of liquidity, bro. What do you think about the Indian Prime Minister? Who, Modi? You tell me. I don't live in India, bro. Are you an ICT trader? I do use a lot of ICT concepts, yes. What exactly is my thesis? For what? You are too condescending. I'm just shooting the shit, dude. I'm just messing around with some of these questions that I get. Lewis, are you in a GC trade or did you take profits up here? $54.8. How do you feel about what? You guys are wild. Is CL set up for a short? Neither a short nor a long right here. I think it will set up for a short because we did hit a bearish unicorn here. This is why I decided not to long it, even though, you would have made a few points off the scalp. But I think it is setting up for potentially more bearish price action. You were about to buy US 30. Did you even see a US 30 chart on here? I don't even have a US 30 chart up. Powell, the rate decision comes out in 30 minutes, guys. The rate decision comes out in 30 minutes. I want to see how gold reacts to this order block right here. Depending on that, we could have a new trade or not. Let's see. Is Powell speaking live? Yeah, at 2:30 p.m. What do you think they're gonna have him on a delay? I think there is a chance to buy GME today for sure. I think going into next week, we're going to see, especially with the share sale completed, the offering completed, I think that we are going to see a potential rally. I don't know that we get up to, 50 or 60. I personally wouldn't buy options on it. I might sell puts here. Buy shares, sell calls. I'm not sure. Gold? Yeah, I'm going to wait to catch another gold trade, guys. I'm going to wait to catch another gold trade. There's this last order block here on the 1 minute. I want to see how it reacts to that. We already did take our money on gold, so that's fine. Do you think a hawkish Powell will turn market down? I don't think we took London low, brother. I don't think YM took London low. You're right. It technically did take London low, but just a smidge. 10:30. Why do you guys keep texting gold? I think there might be a long on YM. I would much rather definitively take this, like more of a wick down here. Gold analysis. Guys, we already traded gold. We already traded gold. Bearish or bullish on news? Donkeyish. Let's go there. How about donkeyish? Oh, that CL long would have worked. GC 5-minute bearish unicorn. Let's see. Technically, yes. I would like to see more displacement down here and then a retracement up. But I think gold is obviously very sensitive to the dollar, and the dollar is going to be very sensitive to FOMC. So I don't think you want to be caught in a big position on gold during FOMC. What does the monthly subscription to your Discord get me? All right. Get you all of my stock analysis, all of my option selling plays, all of our day trades. It gets you access to the chat, which I'm in almost every hour of the day. It also gets you access to the live trading calls. So what I'm doing with you guys now on YouTube, I do that on the Discord every single day. I don't stream on YouTube that often, but I stream every day on the Discord and give you my trades, my analysis, etc. So it actually gives you quite a lot. And if you use that coupon code in the description, you will get 20, I think it's 25% or 25% off, 20% off for life. Mahed bin Mansour says 1,000% worth it. Who's buying puts? Imagine says. You want to know how I know you're not in the Discord? Is because you ask a question like that. That's how I know you're not in the Discord. I can't join the Discord. Why? Unable to accept invite? What are you talking about? Wait, are any of you else having a problem? It's the link in the description. Just go here. Make sure you use the code SPRING99. And you're in. FOMC prediction. I don't know, dude. Go down the street and ask your fortune teller. She can whip out the tarot cards for you and tell you. I don't care about what the prediction is, dude. I wait for the price to form, and then I can't join either. Does a mastermind fee include chat room access? Yes. The mastermind is a lifetime that also includes mastermind access, meaning I do a mastermind class that's 4 weeks every single month, and you get access to every mastermind upcoming and every previous mastermind recording. What's my prediction for the Fed rate? Unchanged. But anyone could have told you that. What Powell's going to say, I don't know. So, no, you're not. I'm not buying puts or calls or anything. 125 a month is wild. Well, that's why I use the coupon. It'll get you for $99 a month. If you still think that's wild, that's fine, bro. You get what you pay for. I trade live every single day. So if you think that's wild, if you think that all this is wild, if you think that's wild, or that's wild for $99 a month, that's good, bro. That's all you. If you think that's wild, it's up to you. No one's forcing you. All right. I really would like YM to take more liquidity. Because I really want to see if I can get a shot at a long here. What about the losses? Dude, I am live every day. If I take a loss, it will happen on live. Which pair of currency to get more volatile? I don't trade currency. I was told you have a $15 million net worth. Who told you that? If you heard it from your mother, she's lying. I told her I wasn't worth anything. To see if she really loved me or not. All right, the only thing I'm interested in right now is whether CL shifts structure for a potential short. I'm looking for a market structure shift on CL. Or not interested in another gold trade. I'm interested in another CL trade. I'm interested in potentially a YM long, potentially. And during FOMC, I want to see NASDAQ and ES potentially fill this or this. And I will look for a counter trade. So I would love for CL for NQ or ES to come into these imbalances here. What time is FOMC? No more, guys. No more of that. You can easily Google this. 100 people asking what time is FOMC is not productive, guys. For the million people that are asking about gold, we already had a gold trade, 500 per contract across 25 accounts. Not looking to enter gold again unless it breaks structure. Please stop asking me. When there's a setup, you will see me trade it. Has the FOMC Fed watch tool ever been wrong? Not during this cycle. The last rate surprise we had was decades ago. Isn't Powell's decision already released? I'm sure you have access to Google. And the answer is no, it's not already released. All right, here's what we're going to do. All right, here's what we're going to do. This way we do not disrupt the chat, all right? If you want to ask me something, put it there. This is how we filter all of the troll questions. What time is FOMC? 2 p.m. Powell talks at 2:30. How much time is that? Look at a clock. Isn't the decision already released? No, it isn't. Gold. That's not a question. We already traded gold. Is gold a buy or sell? Neither. You're late on the gold trade. We already traded it. All right. This is a great question. What's your favorite setup? Conscious asked. I have 3 favorite setups. Okay. One is a 2022 model, a 2022 ICT model, right? Where you have a sweep of liquidity like this, a break of structure like this, and a retracement back into either in a fair value gap or an order block. Okay? That's my first favorite setup. My second favorite setup is a unicorn setup where you have a breaker inside a fair value gap, right? That is my second favorite setup. We actually took this on gold before lunch. My third favorite is a sweep of liquidity and a creation of an inverted gap, which you usually see in the early, right around market open, okay? So NASDAQ here has a very good example from yesterday. Market opens, we sweep liquidity, 950 macro runs, creates this inverted gap. We close above the inverted gap, and that's where you place your entry. Those are my 3 favorite setups. 2022 model, unicorn, sweep of liquidity, inverted gap. And if you want to learn how to do those things, join the private live stream on June 23rd. It's the first link in the chat. Okay? Very good question, Conscious. 10 minutes until FOMC decision, guys. 10 minutes until FOMC decision. All right. I'm glad we did this Q&A because we're filtering out all the crappy questions that can either easily be Googled or things that I have repeated a million times, or questions such as thoughts on thoughts. Can you show your gold trade? My gold trade was essentially this. The first one was off of this inverted gap. Once we closed above it, I took an entry here. And it rallied, although I personally set my stop limit to break even after a little bit of a rally. Hit my break even. A lot of people made money on that. That was the first one. Second one was we created this inverted gap and closed above it. Came back down exactly into the inverted gap, and I longed it from here and took my profits here before lunch. There you go. $43 more likes, and I give away a hoodie. 43 more likes, and I give away a hoodie. We already gave away an I Love Mondays mug, but 43 more likes, and I give away a hoodie. I really wish YM took more of a liquidity sweep here because I want to long it. And it's hard to long with these equal lows here. Rate decision in 5 minutes, guys. 5 minutes. I would long YM here. This would be a long for me. But the rate decision is going to come in and wreck all stops. You could take a long, high risk long with the stop limit here. But I would much rather wait for the rate decision and then Powell will start talking half an hour later and we will likely get a counter move. So I'm going to be patient here because we did make money earlier, a lot of money, and I don't want to give any of it back. Noah says, what's the most valuable lesson or piece of knowledge that you would tell your younger self in regards to business and building wealth? There are a few things. One, don't try to act like you know something when you don't. So be as humble as possible in something that you want to learn and know that your knowledge is lacking. And when you are humble and you accept that you don't know much and you don't pretend like you know something, you are much more receptive to digesting info from people who do know, right? Find somebody you trust or a group of people you trust and find mentors that are proficient in something that you want to learn. In terms of building wealth, bro, what I could tell you is not novel, right? All the material shit, cars, watches, all that stuff can wait. All that stuff can wait. I would say continue to bring in capital and invest. Make sure that you are investing every dollar that you make that you don't need for disposable income. Fuck the cars, fuck the watches. That's what I would say, and that's not anything novel, right? Investments over material stuff, and then humble yourself when you don't know something, and seek out mentors in order to digest as much info from as possible. It's really not that novel. And then also don't limit yourself, man. Like I said this at the beginning of the stream, but it's very common for us to be like, oh, I can't do this. I don't have enough money. I can't do this. I don't have enough money. Sure, you might not have enough money now, but don't limit yourself and place yourself in a position where you think you'll be in that same class for the rest of your life, right? Upward mobility is possible. It takes time, but it also takes belief in yourself, and it takes proper planning, making the right decisions, right? But yeah, I think, like, for instance, if you wanted to learn trading, sure, you could do it on your own, but find people who have traded and who know what they're talking about, and join that person or join that group and try to digest as much as possible. If it's for any line of business, real estate, whatever, same thing for that line of business. All right, we are about 1 minute. We are 1 minute away. I'm going to play CNBC right now. We are 1 minute away from the rate decision. I expect that there will be no rate cuts, but all eyes on what Powell will say. So
determine the trajectory of whether we get, 2 or 3 rate cuts this year.
David, give us about 20 seconds of thought.
Okay, I think the dot plot will show 2 rate cuts as opposed to 3 rate cuts in March, but that's not too bad. I think they'll say there's less progress in inflation, but not a lack of progress in inflation. So I think the messaging will be reasonably dovish. I think they'll be encouraged by seeing some moderation in inflation. And I still think we'll get a first cut in September.
I said 20 seconds, and you hit it on the nose.
Perfect.
Thank you very much, David. We'll get back to you in just a little bit. And meantime, let's go to Steve Leisman now for the Fed's eagerly awaited decision on interest rates.
The Federal Reserve in its June meeting leaving interest rates unchanged and continues to say that it won't be appropriate to cut interest rates until it's gained confidence that it's headed towards its 2% target. The Fed on average now projecting 1 rate cut this year, down from 3 in the March forecast. 4 officials, in fact, are projecting no cuts this year, up from only 2 in March. One official actually says no cuts this year or next year, no cuts for you. They are projecting 5 cuts through 2025, which is down only 1. So they kind of get it done over the same period of time. Just the near-term cutting is much less. And I'll get back to that in a second. On average, they projected higher Fed funds rates this year and next. And, of course, interestingly, in the long run, the neutral or long run rate now up another 0.2 now to 2.8 from 2.6%. They only accounted for the recent progress with this morning's low inflation, by the way, along with the good numbers in April, saying there has been modest further progress towards the Fed's 2% target on inflation. They had noted a lack of further progress in the March report. GDP outlook unchanged at 2.1% this year, 2% next year. The Fed saying economic activity continues to expand at a modest pace, same language it used in the May statement. Unemployment rate forecast was unchanged at 4% this year, a tick higher for next year than had previously been forecast at 4.1%. That's, of course, interesting because we're already at 4%. They did say in the statement unemployment is low and the job market is strong. Core PCE, interesting here, too. The average for officials now is at 2.8%, up 0.2, even though the street estimates after this morning's report are that it will come in at 2.6% this month. So they're projecting, in fact, a degradation or a decline or an increase in inflation this year on the core. In fact, only 3 words were changed in this policy statement when it came to the economy and the policy sections on it, and that was about the inflation that I read already, otherwise a carbon copy. Guys, an idea of how hawkish these projections are, I will tell you this, and you can write this down at home if you're playing. There were 10 officials in the March projections at 4.625 or below in March. Now not a single one is there. They're all above 4.875 for this year. So it feels like either they ignored the progress on inflation this month or last, or there was some kind of a coup of the hawks in the Fed committee room this meeting.
All right, Steve, stick around and let's get back to our panel for some reaction here. Let me begin with you, David, if I might. Is the market likely to like what it's just hearing?
No, it won't. I think the market will have been responding to better news and inflation this morning. But of course, the summary of economic projections, that was revised since March, not since the May meeting. So that's relative to what they thought 3 months ago. But still, I think it was reasonable to say that, of the officials in March, maybe on average they go up 25 basis points at the end of the year, not 50. So this would be a hawkish result in the summary of economic projections. And the problem is that if the Fed doesn't project a September rate cut on average, then it's much harder to implement one. So, we're of course we're just playing with small numbers here and decimal points. But overall, the market, which was reacting very well to this morning's CPI report, will be somewhat disappointed the Federal Reserve now sees only 1 rate cut this year.
That said, Michael, I think the market also understands that the Fed is itself kind of a lagging body. Their meeting started yesterday. We all know they're not going to get the 8:30 CPI report, go into the meeting and say, throw out everything that we did yesterday. We're going to come up with a different decision. And they wouldn't hang anything on a single data point anyway. So perhaps this gyration that we're seeing in response is saying, yes, the Fed still sounds hawkish, but that's because the data prior to the last couple of weeks was much more so than it's probably going to be now and going forward.
Yeah, I think that is true. The employment report was, quite strong overall. We're generating jobs, 250,000.
Bro, this guy's hair is fucking epic.
For Q2 is now up well over 2%. The economy is likely to grow at least 2% this year unless there's a sudden shift in the economy. There's a lot of good things going on in the economy, and a lot of sectors of the economy not doing so well. But in aggregate...
Like, he can only see out of one eye. You realize that, right?
Things are going pretty well. Inflation is still well above target.
You have a policy rate at 5.5%. Now, Steve said this was interesting. They raised their long-term estimate call of what the neutral rate is to 2.8%. But either way, you could say we're 2 points plus above what neutral should be for an economy. So do we need to still be that restrictive?
Well, exactly. The big question they're grappling with, is everyone's grappling with, is how tight is monetary policy? Where is the neutral rate? How fast can this economy grow medium term? We're certainly doing a lot better than we were in the pre-COVID, post-GFC world, and that would suggest that if growth can grow faster, policy rates may have to be higher for longer. We've thought all along that we're not going to see a major rate cutting cycle. We're going to see a mid-cycle adjustment of 50 to 100 basis points, and that's probably it.
Kristen, you say or you said just a moment ago that we're experiencing in the labor market maybe a cooling, not a contraction. Is what the Fed is doing and saying today consistent with that view that the economy and the labor market may be cooling?
I mean, looking at the statement, I don't think very minimal things change within the statement. But I think in the press conference, this is going to be important. What data points does Chair Powell actually talk most about? Because yes, you had non-farm payrolls come in very hot, but when you look at JOLTS, when you look at the ISM surveys, right, that we've seen a slowing within the labor backdrop there. There's even some estimates that we could see revisions to non-farm payrolls. And so I think the language and the tone that Chair Powell uses in terms of speaking about the employment backdrop, yes, it's strong, but if there's signs of cooling, this can give a little bit more insight. And I think the biggest surprise in this is really the 3 cuts down to 1. I think that is something that the market was not anticipating. Seeing 3 to 2, anticipated 3 to 1, not so much.
No, I think that's absolutely a great point. So, David, let me ask you about that. If the market this morning was at 2 cuts this year after CPI, now the Fed says it's only at 1. How do you think that gap gets rectified, and how might we expect to hear Chair Powell talk about that?
Well, I think one of the things he said in the past is that participants do have the option of updating their forecasts based on incoming data during the meeting. So presumably they did have the option of changing their forecast today based on CPI, but perhaps they were reluctant to do that based on one data point. Overall, we still got plenty of CPI reports to come. And to me, the most interesting part of the CPI report this morning was auto insurance finally cracking from this 22% year-over-year gain that we saw in April to a negative 0.1% in May. So if auto insurance continues to back off here, then the measures of inflation will be coming down. I think September may come back onto the table. But for right now, I think it'll stay off the table in the futures market until the Fed shows some signs of getting a little more dovish after this sort of tilt towards a somewhat more hawkish outlook.
Steve, you have some thoughts?
Well, I think what looks to be happening now, is the market looks to be ignoring this statement and these projections, and I'm not sure the market's wrong here about that. I think the market is processing the data in a way that's different from the Federal Reserve. The market, I think, showing a steadier hand in its take on the data. The Fed I think it feels to me like this is a statement that you would write in reaction to the inflation numbers we got in January, February, and March. And it seems to ignore what happened in April and May, which seemed to me to put us back on the tack and the track we were on at the end of last year, which was further progress on inflation. If you have further progress on inflation, why would you so drastically change? And not just the hawks on the committee, but almost everybody lifts it up, gets rid of rate cuts. I think what David is saying is rather smart, the idea that, hey, the Fed may not see it now, but they might yet be cutting in September if the data continue the way it's been going.
All right, Steve, thank you very much, and thanks to our panelists. For now, we're going to end the conversation here and move forward, Kel.
Yeah, let's see how more of how the market's reacting. In fact, Bob Bassani is over at the New York Stock Exchange. Bob.
Kelly, this is a negative for stocks, but a mild negative. So the base case was relatively few changes in the economic policy, and that's what we saw. The prior statement did cite a lack of progress on inflation. That has been changed to now there's been modest further progress on inflation, so a mild upgrade on the battle. But the real problem here is the dot plot. We were expecting 2 rates cuts. Now we only have 1, and 4 people said no cuts. That's a little bit of a surprise. So that's a bit of a negative. So let me address Steve's issue here about why isn't the market down more. Look at the conditions right now. We have disinflation, clear trend right now. We have rising earnings.
What did I tell you guys before FOMC? That I'm looking to see this clearing out, right? We got a clearing out of this level here on NASDAQ right here. And on ES, similar level, right? Now, ES dropped a bit more than ES. ES dropped a bit more than NASDAQ. You see that there is divergence here with NASDAQ making a higher low and ES making a lower low. It's funny because they're saying, why hasn't the market reacted negatively? It's still very early. I'm surprised that these people that work for CNBC don't know to wait for the actual FOMC speech, especially because they're talking about the dot plot, right? The dot plot was based off of March data. The dot plot doesn't take into account today's CPI. I'm on mute. I don't think I'm on mute. No, I'm not on mute, fool. The dot plot is is based on March and not today's CPI, right? So it is wild that the Fed is projecting that PCE goes up, that core PCE goes up 2.8 from 2.6. Also wild that the 4 Fed members projected no rate cuts for the entire year, and now the average projection is 1 rate cut, as opposed to the average projection being 2 rate cuts the last time that we got the dot plot. So that is crazy, but also does not take into account today, which, today shows, again, according to the Cook numbers, today shows that CPI is much better than expected, 0.1% less than expected year over year, unchanged month over month, which hasn't happened since March of 2020. So it is wild that these fools don't know, or that they're prematurely talking about the market reaction when there's still 18 minutes left until Jerome Powell talks. This is just an initial reaction, but as I said before, I do expect these levels to get taken out here. The reason that I didn't short is obviously because you tend to get wicks up and down. So even if you make the right call, there is a chance that you get stopped out, which I'm not interested in. And like I said, I'm not giving back any of our money that we made already, right? So I think that there's still time to get in a good play, and I'm going to be waiting for Jerome Powell to start talking in 17 minutes. The way that this affects the dollar is rallying because there was a more hawkish tone. There's a more hawkish tone based on the dot plot. Obviously, we haven't heard Jerome talk yet, so we're just basing this off of the dot plot right now. So there's a more hawkish tone, meaning more hawkish, i.e., interest rates up, dollar up, gold down. So that is essentially what is happening right now, is that you're seeing a down move on gold, and you are seeing an up move on the dollar and on rates, right? So he is saying short. Guys, for those of you that just want puts or short or whatever, this is not the right channel for you, frankly. We are much more geared towards sensible trades based off of levels, off of stop limits and TPs, etc. I didn't say long. I didn't say short. What are you talking about? Where can I watch the news myself? Go find a channel that you like. But yeah, I mean, for those of you that are just wanting short or long or whatever, I mean, in all honesty, you guys are just gamblers. You're not interested in real trading. You're not interested in formulating actual trades based on risk reward, based on stop limit and take profit. You just want to get in a quick trade and hope that you are right. This channel is primarily focused on trading, on taking trades that have a high risk to reward based on levels, etc. Not just entering trades willy-nilly. If you wanted to buy puts or buy calls, you could do that on your own. You don't need me. Far from unwound. You are not wrong, my brother. You are not wrong. All right. Powell talks in 15 minutes. Powell talks in 15 minutes. Looking to see if we can capture. Here's what I'm looking for, right? I want to see if we can capture an up move to take out buy-side liquidity before a potential down move, or a down move to take out the remaining liquidity here before then an up move, right? We have this consolidation. So this right here is the consolidation part of the power of three. I want to see either a manipulation up to then take a down move, or a manipulation down to then take an up move. What's the news with CPI? CPI was 6 hours ago. So Google it, brother. Google it. I think people are asking what's your bias. My bias is I don't care, dude. That's my bias. My bias is I'm waiting for certain levels to get hit and then I'll enter a trade. If you're trying to guess long or short, you are just gambling. Before Powell talks, I'm interested in a move here. I'm not going to lie. Before Powell talks, I'm interested in a move here. I want to see if we close above this or not. Yeah, see, remember, guys, remember how I was talking? I want to see a more definitive liquidity sweep here on the Dow. We got that, right? We got that. So now I want to see if we can come up and break structure. This is very interesting that we closed above this 5-minute gap here. Oh my God. Apple hit 218, guys. Apple hit 218. Hell yes. We bought the absolute bottom at 165. Hell yes. Man, I'm so happy. I'm so happy. Powell talks in 9 minutes, guys. I was contemplating taking a short on RTY here, but I won't. Guys, I cannot believe we caught the bottom on Apple, guys. 165. Bought it back. Sent the alert back in March. If the Apple AI seems a bit underwhelming, yeah, I don't care. I bought it at 165. It could be as underwhelming as possible. All right, so if Jerome Powell is hawkish, because remember that the dot plot that they were stating was from March data, right? So if Jerome Powell's hawkish, the dollar goes up further, that will set up shorts on gold. It's going under 165 next year, you'll see. I don't care. It can go to 0 next year. Are you going to come take my money from me? What is your favorite movie? Pulp Fiction is up there. Pulp Fiction is up there. Godfather obviously is up there. Casino's good. Prestige is good. Wolf of Wall Street's good. Interstellar was... Bro, I don't know what it was about Interstellar. Interstellar was like... I don't know. It was like moving. I don't know why it moved me so much, but Interstellar was very moving. Big Short's amazing. Usual Suspects is great. Schindler's List. I wouldn't put that as my favorite movie, no. American Psycho was good. American Psycho is good. Mad Max, yeah, I wouldn't put that as my favorite movie either. But it's all right. All right, Powell talks in 5 minutes, guys. Gladiator's up there. Forrest Gump's up there. Boiler Room is great. Boomerang is funny, definitely not in the best movie category. Dark Knight is up there. Five minutes, guys. Shawshank Redemption is in my top 5 for sure. American History X, No Country for Old Men. These are all fucking amazing movies. I'm going to be giving away a hoodie, so stick around. We hit 1,000 likes thanks to you guys. So I'm going to be giving away a hoodie. Saving Ryan's Privates. Trading Places. That's an all-time great for me. Not only do you learn about futures trading, in trading places, you learn about market making too. I saw the movie as a kid, and I thought it was a joke when they said that they traded orange juice futures. Training days up there for me. I rewatched it the other day and actually understood it. Yeah, when I was a kid, I didn't understand it, right? But now you watch it as a trader, you're like, holy shit, this all makes sense. Rush Hour, amazing. Risk Reward Trading says, this man is sassy. Yeah, bro, I learned it from your mother. That's where I get my sass from. It rubs off on me every time I hang out with her. I get a little bit more sassier. All right, guys, enough with the movies. Enough with the movies. 3 minutes until Jerome Powell. If gold spikes, I mean, if the dollar spikes, because of Jerome, I could see us getting rejected on gold. If Jerome is dovish, then I think gold has a chance to fill this fair value gap up here. So let's see. Z's favorite show, How I Met Your Mother. Oh, Milan, you're funny, bro. Bro, the dollar's down. Yes, I know. But if Powell hawks Dixie... Okay, how's that different than what I said? What is your favorite alcoholic beverage? I don't drink that much, to be honest. But if I'm on vacation, yeah. I like a glass of wine or a good whiskey on the rocks. But I really don't drink that much, to be honest. That hoodie, I'm going to announce the winner of the hoodie after Jerome Powell starts talking. But let's hear this.
So there are a couple of different things he could choose to do. He could choose to emphasize maybe some of the more recent data, talk about kind of obliquely or directly this morning's CPI number showing that inflation's coming down. Maybe he thinks it'll stay that way. In other words, he could try to shift the emphasis from away from the more hawkish tone of the data prior to that to something, more forward-looking and say, there are signs it's coming down. I think the market would take that obviously as a positive.
Yeah, and I think that's what he should do. And I think it's likely what he'll do is that we have a soft landing. Things are looking good. The economy has slowed down.
Who's this guy with a lisp?
And unemployment.
I don't want to hear from this guy with a lisp. Hold on, guys. I'm going to find a real stream. That dude talks weird. Uh-huh. Found it. He said, soft landing. Y'all are wrong, bro. Soft landing. John, what's going on, dude? John Belan, what's going on, bro? I haven't seen you in a while.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa, The Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the dot, their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all of them as plausible. But I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident, have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that, and some people do, some people don't. Most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen. Hi, Chair Powell. Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So 2 things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now, but ultimately we think that things like the neutral rate are driven by longer run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but, you know, no one has that as their base case. So no one on the committee does. But so that's you know, that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and you know, that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So I mean, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, you know, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, you know, low mortgages. In terms of banks, the banking system has been, you know, solid, strong, well-capitalized, lending. You know, we've seen good performance by the banks. We had the turmoil early last year, but, you know, banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, you know, seems to be in good shape.
Chris.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, you know, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, you know, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, you know, and I think you can see it in various places. You know, in some parts of non-housing services, you see elevated inflation still, and that's probably to do with. It could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and you know, we've taken some signal from that. But you know, and of course, housing services, you're continuing to see high readings there. To some extent, that's you know, catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, you know, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, you know, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even?
This is what I want to see, a sweep of these highs right here. This is what I want to see.
Pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. You know, really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people cannot think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire. Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees. But you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago, and we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up spending.
All right, guys. So how are you copying whilst trading on TradingView? I did a whole tutorial on this, but I have my. Oh, this is what I'm looking for here, guys. This is what I'm looking for. YM going crazy. I took the YM longs here, guys. I took the YM longs. Paying dividends. Paying dividends, my G's. This is the spike that I was looking for. Remember I said I'm waiting for liquidity to be taken above here? This is the spike that I'm looking for, guys. This is the spike that I'm looking for.
Would bring rate cuts sooner. And I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker?
What do you say? Kirsten's TQQQ long? Not sure what you're talking about. What do you think about gold? I think gold is pretty. I actually have a gold chain right here.
Has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things many things would make it on that list, but I don't think I'll butter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of.
Killed it on the YM long, guys. Killed it on the YM long. I'm up 15K on the day across 25 accounts. All right, so what Jerome Powell was saying, he basically wasn't answering many questions. He did say that, they aren't looking to cut rates sooner because of today's good data. Slightly hawkish, I would say. He even mentioned that some of the labor market data is overstated, which is surprising to me because that's something that we all thought. But yeah, YM looking really good here, guys. YM looking really good here. All right, so there's about 45 minutes left in the day. With the SPY pumping, do you think the economy is doing just fine? SPY is the stock market, and the economy is the economy. The economy and the stock market are two different things. Was there an alert for YM? How can I type out an alert when I'm on the stream trying to watch Jerome Powell and trading at the same time? I must have missed it. I'm trading right in front of you. What do you mean you must have missed it? I'm executing trades right in front of you. Are you showing you entering the trade? All right. All right, guys. I'm going to take the stream I'm going to go to the Discord. I streamed for you guys for 7 hours. And I think I'm a little pooped. And it seems like whatever I do is not enough. I gave you guys 2 winning trades on gold. I told you what my thesis was for YM. Guess it's not enough. I will be doing a giveaway for the hoodie because I promised it and I'm a man of my word. So I'll be doing giveaway for the hoodie right now. But I don't think I can take streaming anymore. So I'm going to go off stream. If you guys want to capture the next set of trades, I will be in the Discord. If you're not in the Discord, make sure you sign up below. June 23rd, I am doing a private live stream. You can join it for free. You have to be on the list. The link is right here in the top of the chat. So click that. You got to be on the link. You got to be on the form if you want to join. Otherwise, join the Discord below. Use the coupon code in the Discord in the link below. And join us if you want to trade with me every single day. And I will be sending out the rest of my trades in the Discord. All right. So if you want to win the hoodie, let's see what question am I going to ask. Let's see what question am I going to ask. What question should I ask? All right. What was the name of the Eastern Roman Empire? I'm going to screen cap, and then I'm just going to take the middle person who answers correctly. This fool says Spartacus. Bro, go back to school. All right. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, let's see who won. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 again. 1, 2, 3, 4, 5, 6, 7. All right, this fool said Albany, so not that. And Duwon Kim said Byzantine. Close enough. So Duwon Kim, hit me up on Instagram, bro. Actually, you're in the Discord, aren't you? I believe you're in the Discord. Hit me up on the Discord. If not, hit me up on IG. And you got to show me proof of your YouTube account. And I'll send you a hoodie, either gray or black, whichever one you want. But I appreciate you guys. Thank you guys for joining. The rest of you, we trade every single day on the Discord, just like this. So make sure you sign up using the link in the description below. I'm going to send out some new plays for potentially Celsius, potentially GME. We'll be setting those out today. And I think there's a monster trade coming up on NQ here, if we can flush below this. So I will be sending that out too. Otherwise, I'll catch you guys in the Discord. Thank you so much for joining. Thank you for the donations. Oh. All right. I got to send this out in the Discord. I'll see you guys in a bit. Peace.